What is up, beautiful people? Welcome to How to Trade, formerly known as the Midday Show. That is Adara, and I am Sharif. We're going to wait for everyone to come on over from the other chat and shout them out. We already have Crap Stock in the house, Chase Bands, a proper paradox. Shout out to Darwin and Pillsbury, Mateus Layton and Chef Joe. Shout out to Hey Davis and Benton C. And the Random Oddities joining us as well. Saman in the chat, as well as Neo and Chris M. Fiddleback and Mary L. Ron John gracing us with his presence, as well as Josh and Big Asian, Whiskey 26 and KFRY, Daryl Finch, Bristol Hog Rider, and Damn. We got Laura Sanchez, we got Sebastian, we got the OG Gorov, we got Rami, we got Rogelio Concepcion and Jay Lee. Shout out to the OJ Jay Lee. We got Zach Frack and Chris Tar, Havana Woody. What's up to Havana Woody? We got Benjamin Wiki. I must like those wicks. I like it. Stock Up and Mary S. Lyman, another OG. Good morning, Adara.
Good morning. How are you doing today, Sharif?
Can't complain. Yourself?
I am doing great, thank you. Yeah, I guess I was confused by the but yeah, I mean, I guess I'm saying like IWO might be saying here. I feel like maybe that's what Sean meant. I was just like, what's happening? Spicy, that's what you meant. Yeah, thank you. So I was just like, ooh. But yeah, lots of, actually it's funny, I was listening to Spicy by Nas, ASAP Ferg, and 504 this morning, so that's pretty funny here too. IWM just took out half the position there at 222.40s, got involved 222.70s. Why did I like this? I like that hard rejection here of 223s. I like the fact that we had this chop and churn here around 222.80s. I initially liked it as a 222.85 short, but then I wasn't able to do that. I was like, get your coffee, Adara. Chill out, don't worry. Then I come back and I see this breakdown. I was like, yes, yes, yes. We're gonna add here if we get to 57s, because that was that previous kind of wick here of support. That's also around VWAP. That's an interesting area for me. Yesterday, if you may have, I'm also adding less than I initially had here. If you may have seen yesterday, one of my biggest issues was I kept moving stops for no reason. Like, imagine it's your first trade of the day and you're not in the money or out of the money, you're just chilling. Then you move your stop to break even. What is the logic? What is the logic? So I came up with a whole bunch of rules for my stops. We'll get into those later, but I am in this IWM trade. The one trade that I might be saying for, though, is Corbus, which is CRBP. I have said, and I want to shout out Obi, because Obi was saying something yesterday that really resonated with me. Don't trade the tickers, trade the setups, right? So CRBP, definitely a small cap, down about a cool 57%. I know I say I generally am not like in love with trading either small caps or SSR names, but when you see a support resistance flip as clear as this one, you want to get involved. I initially liked it as a long heading into 22s. Obviously was unable to get that. I was at the desk, but so then I ended up getting long as I sat down here. Looks like we just got stopped out there. So that's unfortunate. Yeah, the plan was to kind of continue riding that to the upside. So it's all good there. Baby, these small caps and SSR names can be volatile, so that's fine. But yeah, I definitely want to hear what Sharif's looking at, just so you guys know what I have in my side chart. We have SPY, we have Crowd, we have CRBP, we got IWM, we got Nike, Coin, FedEx, and PLTR, though I am going to move one of those names in favor of CEG, which I like a lot better. How are you doing, Sharif? Good.
All right, so today we're going to have Joe on at 1 o'clock. Joe is a really good options trader, and he's got a lesson for us set up to kind of just introduce us to options, which I know I'm very excited for, because I'd like to improve with options as well. So no real lesson for the day today, but we are going to go over yesterday's. I'd like to be able to do it. So let's get right down to the rounded bottom, the saucer pattern, otherwise known by John J. Murphy. So let's just get right to it. So by the end of this lesson, ideally, we would like to be able to identify and analyze how the bottoming pattern works in technical analysis. Key elements of this pattern are going to include its structure, the volume behavior, as well as the psychology behind it, because this pattern actually reflects the market psychology from bearishness to bullishness, and it evolves over time. So I'd like to be able to kind of break that down for you guys, as well as the breakout confirmation above that neckline level. This neckline keeps featuring in, whether we're talking about double tops and bottoms, inverse head and shoulders, or yes, the rounded bottom pattern. So let's get right down to it and speak a little bit about, some of the basics of this pattern. So it's a rounded bottom. Otherwise, some other traders call it the saucer pattern. I'm assuming because of its shape. It is what we call in technical analysis a reversal pattern. We have continuation patterns and we have reversal patterns. This one is reversing the previous trend that preceded its formation, okay? It's signaling to you when it forms the change from a downtrend into an uptrend. Very important here as it kind of, changes market sentiment. Right? It's a rare pattern. It doesn't happen all that much, but when it does happen, it is often quite reliable and it takes a longer period to form. So you're not really having to chase this one like a V-shaped pattern or, a flat bottom break where you miss your level. It gives you ample time to form in to the position, and it makes a great deal of sense to form in because that base, which I'll show you in a second, is where accumulation takes place. And if you go back to our week where we talked about Wyckoff, accumulation and distribution, it'll make a lot more sense when you see that pattern formation at the bottom. So let's get right down to its key characteristics. It takes place over an extended period of time, as I just alluded to, and it signals a long-term bullish reversal after a prolonged downtrend. So let's get right to the picture over here. So we don't actually have to, be in a lower low, lower high situation. It's okay if we had lower lows and lower highs, and then we kind of consolidated, as you can see here. But the market was obviously in a downtrend, found a bit of its base, and this is kind of the accumulation level that I'm talking about that takes place when big money gets in or out of a position, and then the incremental higher highs. Okay? So the structure and the formation of the pattern, super simple. It's a rounded bottom, so it appears as a U-shaped curve, right? Reflecting what we call the gradual price increase or decrease initially, then the price stabilization as it finds a bottom, the lower part of the U, and then the gradual rise forming that bowl or that U-shaped pattern, okay? Unlike sharp reversals, this pattern unfolds slowly. And that, to me, is the best signal because I don't really want to be forced to make decisions awfully quickly. I'd like to be able to digest what the market is telling me about this name, and this pattern absolutely gives you that, okay? Some key aspects of the structure. Okay, this is important. The downward phase. This is where everybody is very negative on the name and a lot of liquidation takes place there. So the market initially declines with diminishing momentum, right? Then you have the consolidation phase, that accumulation phase that takes place at the bottom of the U. So the price flattens out, it forms that bottom, and then basically you can mark that as your midpoint. Then the uptrend comes in, right? Incrementally, we start making those higher highs and higher lows. Nothing really parabolic, not a V-shaped. Again, really it is slow going here. It's a U-shape. And this is kind of what we talk about when we say this, right? So we had the market sentiment really bearish over here. Then we create that base. We don't have to be in a flat line. That's the thing. But you generally have to see the ending of the lower lows and lower highs, a bit of a sideways move, then the start of the higher highs and higher lows. And that's essentially what we get here after March of 97. Because you can kind of see we bottomed in February of 97, then incrementally we start making those higher highs and higher lows. What's this blue line? So this is the neckline. And the neckline is quite operative with these reversal patterns, whether they're double tops or heads and shoulders. There always seems to be a neckline that we can base a more conservative trade off of, and we'll get to that in a hot second. The volume behavior here, as with all these reversal patterns, super important. We talked about volume on the right side of the shoulder and the head and shoulder. We talked about volume on the right side of the W on the double top and the double bottom. Specifically, this one, kind of the same game. So the volume plays a critical role in confirming the validity of the rounded bottom pattern. It typically follows this trajectory. First, you have declining volume as you make lower lows and lower highs. So it's in that selling phase that we talk about initially, right? So during the downward phase and the flat base as well, it shows basically reduced selling pressure. Then you have increasing amount of volume, right? As the price begins to rise and makes those higher highs and higher lows, It's signaling to you accumulation and a renewed buying interest. Accumulation, the operative word here. If you do not understand what accumulation and distribution are, it is incumbent upon you to understand it if you want to swing trade, because that's a lot of what you're doing there. You're waiting for that big money to get in, form a base, and then you're looking to kind of ride with the big money. Again, you're a market observer. You are not a market mover unless you're very rich. So in particular, the volume spike near the breakout, which is the neckline that I just showed you, confirms the strength and the upward move. And this is what we're talking about here. We get that kind of downward, lower lows, lower highs. We form a bit of a base, even though this is a bit of an outlier. But we kind of have that neckline that was the previous high that we never broke above. Super easy to gauge that, right? You know that that high was as good as you could do, at least, within this context. So once you get back into that high, you should already be on alert. Right? You're getting back into those local highs. You know that's a key area of resistance. So it's fine that, we're drawing a horizontal trend line there. You would have drawn one anyway if I had told you not to, because of the previous high, right? So, all right, the NQ is coming into 19,000, which was the level that I was looking at. All right, so the psychology of the pattern, super important here as well, because the price action really reflects the market psychology. So let's talk a little bit about that. The rounded bottom is essentially reflecting the market shift from bearishness and, not really liking the name to, kind of indifference as it accumulates to bullishness as we start making higher highs and higher lows, right? So the early downtrend, essentially, traders are pessimistic during that time. It leads to selling. Obviously, they're not going to be buying it up if they're pessimistic. Consolidation, this happens as the price flattens out. The bearish sentiment starts to wane. People don't feel as badly about the name anymore. And then, all of a sudden, the buyers are coming in. How do you know that? Because we're not making any lower lows. We've now flattened out. If the bearish sentiment was to continue, why would you not be making any lower lows? Somebody's got to like it at that level to buy it up. You need to keep that in mind. Then the uptrend comes into play. The confidence of investors and traders in the name starts to build up slowly. The buying pressure starts to push prices a little bit higher, but not in a parabolic way, like a V-shaped recovery. This is signaling to you market optimism, or the beginning of market optimism. And the thing is, it's a slow shift here that reflects the accumulation phase, right? Where essentially the bigger money, sometimes called smart money, but not always, bigger money, gradually enters the market. And this is what we're talking about here. Again, psychology is super important with respect to this pattern. Gradual decline in the price as the market doesn't really like what they hear from it. And then you kind of have the rounded bottom shape forming. That's where accumulation starts taking place vis-a-vis bigger money coming into the market. Then you have the volume start to confirm that as well. So you start getting those higher highs and higher lows, but you need to keep a look at the volume bars. Are they higher than they were on the downward move? If yes, then what you're seeing is accurate. And then that breakout comes in vis-a-vis the break of the neckline. So super kind of structured, not always easy to execute though in IRL. Let's talk about the breakout confirmation, because that's the neckline that we were talking about. So this is essentially the most critical point of the pattern, which is the breakout, right? Most traders are going to take it there. This occurs when the price rises above that key area of resistance that we couldn't break through all the while we were making that saucer pattern, the rounded bottom, right, from the beginning of the downtrend. Here are the key factors to keep a lookout for. The resistance level. This forms near the start of the pattern, that kind of that local high that I told you about there, okay? Then you break out from that key area, local high, on volume. So surge in volume at that level when the price breaks through resistance confirms to you essentially the validity of the reversal. Again, this is a reversal pattern, but a proper breakout should be accompanied with high volume, signifying new buyers are entering the market. It's not about that recycled money. It's about that money that was sitting on the sideline or sitting in a different equity or a different instrument to weasel its way into this one. That's all you care about. We're talking about this one. We're not talking about the other ones. And there you go. So you have that lower low, lower low, lower low. We're making that kind of rounded bottom. We don't make any lower lows or lower highs. In fact, right at that middle point, we start making those higher highs. That neckline should be the area from which we could not break, okay? Trading strategies for this one. So this is interesting. So once the pattern is identified, again, it behooves you to look at the trend that preceded the formation of the pattern, okay? Traders can develop strategies and capitalize on this bullish reversal. How do we get in? The entry point. Here, the more conservative entry, again, I stress this, the more conservative entry gets in upon the neckline break. That is not the only way to get in. Once you see that bottom has formed, that rounded bottom, and those higher highs and higher lows start to come into play, you can get in there and placing your stop below the lowest low. It's not the only way to get in, but this is a more conservative strategy where you wait for the neckline break because that's confirming to you that key area of resistance got taken out, okay? Stop loss placement, also a little bit, I don't want to say subjective, but everybody might do this a little bit differently, right? So the logical stop loss is just to place it below the lowest low, the lowest part of the rounded bottom. That may not work for everybody. If you're getting in on that neckline break and that neckline and the low, well, you're going to have to do a 1-to-1 reward ratio there, right? Because you're projecting, which I'll get to in a second, the neckline to the bottom upward because that's going to be your beak wetter. So if you're going to take a neckline breakout, you're going to have to do a 1-to-1 reward ratio. That doesn't work for everybody. Your target, your price target, this is kind of what I just alluded to here. The price target is often calculated essentially by measuring the vertical distance of the pattern. So from the lowest low of the rounded bottom to the neckline break, measure how many dollars, pips, whatever you're measuring between the neckline to the low, and then project that up from the breakout of the neckline upwards, and that should be your profit taker or your first profit taker, okay? This method offers a reliable risk to reward ratio, 1-to-1 in this scenario, especially on longer time frames where the pattern tends to develop over a little bit of time. So there you go. So here you have these obvious highs from which we could not break. That is obviously until over here. So if you were getting in upon the neckline break, see how the entry is here? And then they put a random stop. To me, this is not going to work. Your stop placement here has to be at the low. So if you don't do that, you're taking a chance, obviously. And that's not something that we don't do on the show. Obviously, we don't always put our stops below the lowest low. Sometimes it has more to do with our risk to reward ratio. That's why I personally would be looking to get in on the formation of the rounded bottom rather than wait for the neckline breakout. Because if I wait for the neckline breakout, then I have to put my stop below the lowest low, and that gives me 1-to-1. And I don't really want 1-to-1. Okay? So that's the look there. The reliability of the time frame, reliability of the pattern and the time frame consideration is also important here. With respect to reliability, it's considered one of the most highly reliable patterns, but it's commonly observed only really on long-term time frames. Not only, but for the most part, okay? Like your daily, your weekly, your monthly, etc. It indicates to you basically a solid, sustained reversal, making it ideal for position traders and investors alike. So that's not a bad look. The time frame here, as we kind of mentioned, we should be patient with this pattern as it takes quite a bit of time to fully develop. But however, the slow formation of this pattern leads to a more stable, long-term price movement. So if you do see it, I don't want to say the hit rate, but the reliability rate quite a bit higher than some other patterns. And just to conclude, guys, to give you an idea about this, rounded bottom patterns are gradual but powerful signs that the market is reversing. Understanding their structure, their volume behavior, the psychology behind their formation allows, obviously, traders to have a better and more effective trading strategy. So the key takeaways here, guys, identifying that U-shaped formation, confirming the pattern with a volume analysis. Are we getting lower volume on the decline and then higher volume on the incline? That's what you should be looking for there. And then waiting for the more conservative traders for that neckline breakout before getting into the trade, not how I would trade it. And then using, obviously, proper risk management here with stop losses. We kind of went through that, where to place your stop. If you're going to get in a neckline breakout, it's going to be a 1-to-1 here if you want to have your stop placement below the low of the rounded bottom. And as we're going to do that, we're going to pay some bills here, Adara, because it is time to tell you about our good friends at Benzinga, Ram. Oh, it's okay. I got it. All right. You can just go to the screen. Oh, here we go. Thanks, Remy. All right, here we go. I don't know where it went. Oh, boy. I'm not sure where my calendar always goes, but, oh, it's over here. Nice. All right, guys, tired of being late to the trade? Are you always playing catch up in the market? Are you missing out on the big moves because you're just too slow to the news? If so, Benzinga Pro is your unfair advantage. Get those breaking news alerts up to 30 minutes before everyone else and pinpoint exactly why stocks are moving. And yes, join a thriving community of traders who share their strategies, yes, in real time. Ready to see how Benzinga Pro can transform your trading? If you are, visit benzinga.com/pro and get yourself that free 14-day trial. Adara.
Thank you so much, Sherry, for doing that. Adri, and for putting together the lesson and everything and delivering it there. Much appreciated. I want to talk here. I am into kind of counter trend longs that I want to talk about because I do. I feel honestly I stand by both of them. So I mean, and the thing is too is you could always be wrong. But what I'm realizing, that's what this goes back to yesterday when I talked about how I kept moving my stop placement for no reason. If you you have to, it's not okay to stay wrong, but it's okay to be wrong, right? So it's like if you're wrong, you know what I mean? You're wrong. Don't move your stop before you have to, right? Don't move it preemptively. So with that in mind, IWM long, I liked because the way we reclaimed that 222 in the book was really dope. Now, we are pushing back a little bit here, but until we break below the 222.85 area, I don't want to get involved. Also, so I look at the IWM for the market, for the, what's that? Small cap recap. So I look at it for that. I put up that 3-minute chart. We're looking to push through lows. By the time I do the small cap recap, we're already up almost $1. This 222 level is pivotal for me for the Russell. So we might get stopped out here, though, because I have my stop at 221.85. Took a more aggressive position, same size that I had in this short. Now, this short, what I did, and this is, I'm going to talk about this just in terms of how I said I'm doing my stops now. So my new plan is do not move your stop to break even until you break below a key level. So in this case, the key, we got stopped out at UM here. That's fine. So the key level here was 222.40s. Took out some here. Took out again at 222.40s. Once we broke below 222.40s, and again, I like that level because A, it got really spicy in the book, and B, look at all of these wicks here, right? So once we broke below 222.40s, I moved my stop to break even. Why did I move my stop to break even at that point? Because I knew at that point, I was like, if we come back, if we break back above that level and then push through break even, I don't want the smoke. I'm clearly wrong. I have to recognize when I'm wrong, so that's where I did that. After that point, once we broke kind of into that 222.25 level where I took some more profit, that's when I started moving my stop to prior bar lows, got out at 222s. The long might have been a bit early or misguided, but happy I tried it because you know what? I think it was Darwin said something in the chat yesterday that I saw and I really enjoyed, and it was to the effect of if you're right all the time, or no one's right all the time, or if you're right all the time, you're wrong, except for insider trading. I don't want to misquote, but I thought that was pretty funny. And yeah, I mean, you're never going to be 100% right 100% of the time. All you can do is stick to your ideas. With that in mind, honestly, probably the more gutsy of my two counter trend trades here, my pal FedEx. So someone in the chat, I forget who it was like, oh, like long FedEx. Why? And I honestly, this is becoming a playbook for me. Long SSR names on earnings, but you have to take them out at previous resistance. So with that in mind, FedEx, will be getting out absolutely. I was going to maybe add here at 75, so I missed that opportunity. We're going to get out heading into that 255.70 area. Why? Because, okay, we're actually going to set that profit taker. Okay, dope, FedEx. You want to be nice? We're going to get this out at 68s. Why did I like this FedEx here? Basically, what happened was I liked how we were setting up at the bottom. Look at this hard hold of 254. Look at these wicks below 254. Then we start to push higher. So I risked into 254. Small position, only risking one risk unit here. And then getting in here at 254.50s. I was really liked what I saw in the book. And honestly, since I've been in the trade, I don't even think we got below 254.35 on the bid. So it looked really bullish. Could have arguably added, but I didn't. The whole thing is you're going to learn every single day. Thank you to Day Trade Dad for the $4.99 super chat. No message there. Let us know if there is a message. Oh, yeah, never mind. AGBA. Yeah, I can look at that for you for sure. There was another super chat, too, that I want to talk about. Mashwar is saying that he appreciates you. So shout out to Sharif. Also, there was something else. Yeah, Day Trade Dad wanting to look at AGBA. AGBA. I think was that song we were calling Abracadabra for a bit? I think it was. Let's look at AGBA. What are the deets on this guy? AGBA group holding. Oh, it's merging with Triller. Okay, so 1 million shares done on the day. Not a huge look on the day, but I'll take a look at the daily chart to see what is going on longer term over here. Okay. I don't want to say flat bottom break, but I don't want to lie and say that I don't see lower highs. There are some lower highs. The other way you could view this, though, to be fair, is maybe a bull flag. Because look at this pop we get here. This is April 10th. Beautiful little push up higher here. Then we make a beautiful bounce here, not once, but twice at 214. Then we start making lower highs. I would say, yeah, I mean, I think if we, at this point, we are making slightly lower lows here. I think it'd be interesting to kind of reclaim that 220 area. That was maybe a bit of an area of interaction, but even more key would be maybe that 213, 214, which is where we had that double bottom. So that's my look here on AGBA. I hope that is of help for you there, Day Trader Dad. Thank you very much for that super chat. Also, CEG, I really like and I was saying this to Sharif earlier, I had all these levels down. I planned to trade. I wrote down every level I wanted, and then the entire trade manifested in front of my eyes at the big desk. And I was like, so I didn't want to rush into this. I did have an order set for a short at 234.70s, but I canceled it because we started doing a bid creep, and I was like, Adara, you're wrong, you're wrong, you're wrong, you're wrong. Canceled it. Happy I did, because that would have been a disaster. But you know what's not is actually FedEx. Happy with how that trade's going. I'm going to let that continue to cook. I guess the biggest thing I'm trying to say is trust yourself. I trusted that I was being a little bit searchy with the CEG, so I canceled it. FedEx, I trusted this move even though it was counter trend. So also with regards to FedEx, I will absolutely be getting out here. I do not want to wait and see what happens. I've got chopped enough, up enough in these SSR, going long SSR names and adding at resistance Dollar Tree, Snowflake. So this is what I'm happy with here. Let's see how this goes. And it's just about learning from your mistakes. How you doing over here, Sean?
Good. I'm in IMRX looking to take this one north. Good a look for this one. I got stopped out of the NNE. It was like more of a liquidity drop over here. Got in at the volume weighted average price with a tight stop into $0.25, but the spread is quite wide on this one at times, about 15 pennies on a $12 name. So the spread got me out of that one. We'll keep tabs on this one. This one, I'd like to defend 3 on. So it's kind of bull flagging in and around 3. So we're long at 07s, looking to add at 3 with my eye on 290 as well. So this one hasn't given you as much of a notional move. So the distance from which it's trading to the volume weighted average price is something that I can stomach. I can dollar cost average into VWAP, which helps my case over here because I love VWAP with these small gap cappers. So we're going to look to defend 3, and then we're going to have another area add in front of the volume weighted average price. That is, of course, if it doesn't continue on its merry way through that 310 flat top that it's been rejecting off. You had initial rejection at 45, 1045 that is, at 310. Again, at 1115 at 310. Now we're whiffling and waffling at 3, but putting in higher highs and higher lows. So like this one as well. The Katina man told me that I got to keep my eye on GME, and I'm going to do just that. It got back into the volume weighted average price. Good look for this one. Have no idea what's going on. And quite frankly, I don't care. 2139 topping tail candle. 1, 2, 3, 4, 5 red candles in a row. Now we're consolidating above the volume weighted average price. If 2030, 20 and a quarter wants to act as a local area of support and to curl right back up, great. We'll get involved in GameStop. But right now, it's a big move down on no news, so I'm not really too excited about it over here. Looking at the news blotter, making sure that nothing's coming in midday over here with respect to GME. I'm going to pack my patience, leave this bad boy up on the side chart. It's not the only small cap gapper that's going here. NNE talked about how I got stopped out of that one. IMRX involved, just got my ad at 3. AMLX looking awfully good as well here. This one not even making its way down to the volume weighted average price. But I got to tell you, the small cap gappers are all suffering from the same affliction today, which is low volume. It's not been a big boy volume day, despite the fact that my scanner is filled with a lot of them. So 323 here, AMLX looking to hold on to the volume weighted average price, very similar to the price that IMRX is on. Okay, so we got the ad there on IMRX and a nice move up. So now we're going to have to wet our beak above the high day break. The high day break for me is obviously 310. Yes, I know that it weaseled up into 312, but this has been the flat top. So a bit of a bigger position. Got to de-risk once that resistance level gets taken out. I'm still looking to add in front of the volume weighted average price. That planned DCA in the mid to low 290s, not removing that keeping my eye on this one. So those are the ones I'm keeping my eye on right now. There's a lot of small cap gappers. Oh, I forgot to mention this one. BNZI was like the #1 winner on the day, still up a respectable 122%. But, you know, really, look what it's doing. It's not even above the pre-market high, so it doesn't interest me too much. All right, well, we just got the print nicely above 311 over here, so nice de-risk. Keeping my eye on this one. I'd like to print a little bit more on this. So let's see if we can weasel up a little bit higher than we currently are there.
Yeah, I'll definitely get that ready. I've been fast there. Also, Coinbase. So Coin, I've noticed there's a fun little trend, and I know I've been trading this. This is technically second day of looking at. This is my second day of looking at this name more intensely, but this is obviously just a joke. But if you don't almost get stopped out of Coinbase immediately after entering, what are you doing? No, I'm joking. But I find like this one is spready. It is going to test you a little bit. You just got to stick with your levels. I'm risking 1 unit here. Got long 166.75. Why? So I don't know why my Coinbase side chart is weirdly a 3-minute, and the one I trade off is a 5-minute. But either way, I saw this kind of curl up here on the 3. Look at this push up here. Arguably could have waited for 167s. I will be adding at 167s, but I like this push up. It was really similar to what I was seeing on FedEx, which by the way, we did get filled in FedEx. Pleased as dang punch there. So yeah, Coinbase, I like this curl up here into the 90 MA. I'd love to see it break above the 90 MA, at which point I will be adding, like I said, we got stopped out there. But yeah, it's all good. Happy I attempted this Coinbase. The plan there was to get out most of the position at 168, but Coinbase was like, nope, didn't work. It's all good. You got to try things if you see stuff setting up. And like, honestly, just due to the how spready this one is, if this sets up again, I might actually get back in, because sometimes you can get stopped out of stuff due to the spread. This is what happened with Darden yesterday, which, like I said, trade I was pretty happy with, and one of my better trades from a process standpoint and a P&L standpoint in a while. But also FedEx, happy with this exit. I've noticed a lot here from trading a lot of these spreadier. One of my playbook trades is becoming trading spready names on day one earnings if they set up. And so from doing that, I've noticed a lot of these names with these SSRs, no matter how strong they are, they get to a previous level of resistance and they sputter. FedEx has been sputtering, which is why I was like, you know what, I have no problem getting back into a long, but I definitely don't want to stay in a long beyond that area. That being said, I should have had more here. This was not a super large position. The risk to reward was pretty good. It was just over 2-to-1, I believe. So nice look there for FDX. But let's see if we can expedite ourselves some other trades. You know what actually is setting up here for me? Palantir is rangy in a couple levels. So again, I don't know why my 3-minute for Palantir is also on my side chart, but look at these bounces off the 90 MA. Look at these higher highs, right? Higher lows. But on the 3-minute, this even looks like a range. We know I like ranges up in here. I mean, if you don't, I do. This is what we used to call an Adara Panera trade over on this desk. Shout out to Sharif. So, I mean, I know I've been trading quite a few tickers today, but I think that's one thing I really learned from that conversation with Obi with regards to don't think of it as trading tickers, think of it as trading setups. If I see setups in different tickers, I don't want to close myself off to those opportunities because I'm scared like, oh, I don't want to be trading too many names. That's what stopped me from having that Palantir reversion yesterday, right? So trying to kind of broaden my horizons in terms of trading. That being said, one name I was looking at earlier is still kind of spicy, and that's going to be SEG. It's going to be Constellation Energy. You know, as I said to Sharif, how I put this pun was this trade earlier was not written in the stars for me. But, you know, the constellation, the stars might align here. Once again, as of right now, still kind of too choppy, bless you, for me to get involved. But I do like the idea of us kind of breaking below that 235 level decisively. As of right now, though, it's just an idea. We don't trade ideas. We trade setups, and we trade things that make sense for us. Also, we vote for tickers, guys. Exclamation point, join, space, $, ticker, whatever ticker you are looking at. We would like to know what makes you tick. Get in that chat. Let us know. Also, I'm just noticing, bless you. I'm just noticing here too, what's interesting is we're seeing, FedEx pushed higher. Shout out to you, FedEx. I might get involved in the dip. But Microsoft also doing something really similar to that setup I like there on FedEx and Coinbase, where it kind of gets above that 90 MA after having a bit of support set up. So I'm going to choose between this and Coinbase. They're both doing things I like over here. Coin kind of wicked me out. So let's see if we can get ourselves wicked back in as a setup for VinFast. How you doing?
IMRX came into the volume weighted average price, so my dollar cost average to defend VWAP at 92s got filled. Now I'm ready for what may come. It's either going to pop up or stop me out. So we're going to watch what it does here at this 290, high 280-ish levels. It looks like we got multiple wicks off 285. Looks like there is a buyer in and around 285 or the high 284s. We'll have to see if this level holds here on IMRX. And it just occurred to me that I didn't give you any of the details on this name. So it is about an $86 million market cap with around 8 million shares traded today, which is not that much for a $3 name, quite frankly. About 21 million share float. And let's bring down trade ideas and find out exactly how much of that float is shorted, about 7.25%. So a decent amount, you know, not the biggest we've ever seen, nor is it anything that I really want to base any strategy off. But, you know, it'd be nice to see some of that squeezing to the high side here. Where those shorts are already, I have no idea. We're going to find out awfully soon. But I got to tell you, I'm looking right now at these small cap gappers, and a lot of them are starting to bleed and break down below key levels. I'm talking about UNNE as well as IMRX. The good one right now looks to be AMLX, but it's awfully weak on volume, so I don't really want to jump into this. I see OKLO. OKLO has a bit of a better volume profile, quite frankly, than any of these. But I should start looking at GME as well, because it is kind of forming this accumulation base right in front of the volume weighted average price. Whether or not this gives way or curls back up or just consolidates for the rest of the day, that is really the question, the unanswered question. So right now, going to keep my eye in the trade that I'm in IMRX. Got that DCA to defend the volume weighted average price, but we're going to have to see if this one wants to weasel down. This is the one I'm telling you about, though, AMLX. It literally just printed day's high at 324. Let me give you the details on this one. Where'd this go? AMLX. Okay, so it's a small cap gapper, but not the smallest small cap gapper. 220 million market cap, about 1.88 million shares traded on the day, and it has a 58 million share float. And let's just check the short float, 3.61, so a little bit less than 3 2/3. They just printed day's highs. Again, you know, this one, what's the spread on this one? The spread on this one is decent. So even though the volume on it, not that great on the day, we talked about 1.88, it looks like 1.89 now. The spread on it, a little bit more manageable than its friend, NNE, which is not very good at all. What's going on over there, Katina Man? The Katina Man is short Tesla at these levels. Keep your eye out on TSLA. He says, see ya, so it's probably looking to the downside here. He just shorted 240 at the volume weighted average price. Adara.
Oh, yeah, we're also going to shout out VinFast here. Thank you so much to our sponsor here, VinFast. VinFast, Vietnam's leading electric vehicle manufacturer, has announced its Q2 2024 financial results. Deliveries surged, Sharif, by 44% quarter over quarter, with 13,172 EVs delivered, which brings the first half total to over 22,000. That's a 101% increase on a year-over-year basis. Q2 revenue climbed to $357 million here, up 33% quarter over quarter. VinFast's success in Vietnam is pivotal, driven by rising EV adoption. With global expansion and new models like the VF3, VinFast aims to deliver 80,000 vehicles in 2024, maintaining its commitment to sustainable mobility. Shout out there to VinFast driving higher. I love that they had driven in their ad read. I have no idea if that was an intentional pun, but either way, I love it. You know what else is driving higher, Sharif?
What?
Mr. Softy. So happy with that trade, and happy too. I didn't compromise. I just set my 435.35s. I was like, let's see what happens here. We're going to take out 2/3 of that position. If we get to 436.40s is where I have this, I believe, and that's just because that was a bit of a chop and churn area of interaction. I'm willing to add back in if we come back and bounce off this 60s area just above the 9 EMA, but I don't want to add now. A, I don't really have the buying power for it, and B, you know what I mean? It's just, I would rather take out some profit first. Also, I was thinking a lot about this yesterday. You guys know, if you watch the show, you know, I think about tickers all the time. I'm always thinking about the market and stocks. Like, it is constantly just on my mind. I was on my walk home. I think maybe I was on my walk home yesterday. I was walking somewhere, and I was like, I can definitely use my buying power as kind of more of an advantage than I am, because right now I'm like, oh, I don't have enough to get in the trades. Instead, think of it as like, okay, you know you have a limited amount to work with, you know, Understandable, right? So then think about like what allocation for buying power. Like maybe you can't be in a million trades at once. What trades make the most sense? Allocate more risk to those. Like Darden yesterday, really happy with those trades. That range was flip-flopping and flip-flopping. So why did I not have more risk allocated to that? Why was I waffling around in meta? Do you know what I mean? Also, now that we're above the 90 MA, I am going to move my stop here to break even. And like I said, that's going to be how I'm moving my stops. Now, once we get above key levels, making sure that I'm moving things to make sure that, like, if we break below that level, then I know I'm wrong, right? So to me, this is at a point where it would make sense for me to move said stop to break even. So we're going to do that there on Senior Softy, Macier Softy, whatever language you want to call him. It is Microsoft. Let's see if we stay above the 90 MA. Also, FedEx, honestly, killing it, but FedEx is still it's still down whatever on the day. Look at this rejection of VWAP. Now, if we keep rejecting this VWAP here, look at that topping tail candle, I'd actually kind of be tempted to short, but I'm not going to short this until I look at the book for a long time. That being said, we look kind of bearish on the book here. We just went from 256.70 on that ask to 256.60. Now we're doing what I call a bid flicker, where you've got 256.52, 256.53, 52.53. I think FedEx is making a decision on direction. I'm going to let it figure out what it wants to do, but I do like this look. How are you doing?
Took a quick short on Apple, but got stopped out for the remaining amount. This one looks strong. There was a level 230.50 that I want to get short off, but we'll keep an eye on that. Maybe it's not ready yet. Long GME just printed on that nicely in the money on this one, breaking up through 60s. I'm looking at 70s possibly over here, or 75s for the next beak wetter. This defended the volume weighted average price quite well. It's putting in a rounded, let's call it a rounded bottom, even though that the trend, you know, on the day's up, but the trend, the immediate trend that preceded it, as you can see, it's a downward move. And we counted the amount of candles. So in the money on this one, let's see what this one does. We're already, what are we, 15 pennies on the money. Let's wait until 75s. I'm going to wait until 75. I'm going to front run it a little bit over here. Let's front run the size, possibly in the low 70s, and wetter beak in and around there. Oh, that's not where we want it. Okay, so we're going to go all the way up here. There we go. We should be good there. Let's check on our original position over here. Nice. Okay, so this one does defend IMRX. Good defend of the volume weighted average price. I'm going to be a bit more aggressive with where I want to take them out now that it's defended VWAP, knowing full well that just because it defended VWAP now doesn't mean it's going to defend VWAP 5 minutes from now. What it does is it puts the odds in my favor of this holding VWAP and challenging for a high of daybreak. Where is that high of daybreak? $3.14. But I'm going to submit to you that the real level on the day is not 314, but rather 310. Look where the closing prints are. Look where the most of the interactions with the candle and the levels are. The candles, excuse me, and the levels are. It is 310. So I'm going to front run that 310 level by wetting my beak south of that, leaving a bigger piece over here for the breakout of the high of the day. That's my strategy. That all basically accounts for me not getting stopped out. We'll see if we don't get stopped out or not. A couple of green candles right now. I like the look, but I've liked the look before, and it's let me know that it doesn't care. So we'll see what we get there. All right, GME worked right into my level. Alas, it did not cross, so we'll have to pack our patience a bit more for that fill. Here we go again with the high 60s. I'm waiting in the low 70s, long 50s at this level. Good double bottom and a rounded bottom off that let's call it 20 and a third. Yeah, let's just say it's 20 and a third, but it looks like most of the closing prints really were around that 40 penny level. But good rounded bottom right now for GME. I wonder if Michel Hebert is in the chat, what he's thinking today about GME, because he's often trading that as well. Shout out to the OG Michel Hebert, been with the channel a hot minute. Katina Man knows who he is. So we'll keep an eye on that. The dead one is moving right back above the level that I liked, Ram. And I was looking at that 230.5 because there was a lot of interaction in the earlier trading session with that 230.5. And here is the chart on AAPL. Obviously, I don't really like taking Apple short because it's long in the long term, but I felt that there was resistance at this level, so we're looking to get short. I did get initially short, wet my beak at VWAP, but it pushed me right back above again, so I got stopped out for the remaining amount on AAPL, hence why there's a whole list, or there's a whole bunch of triangles in and around there. So pack our patience here on IMRX, looking for that 3 break and then eventually possibly a top break at 310, and looking to wet my beak here at GME on 2 3/4 Adara. Or sorry, 20 3/4, excuse me.
Yeah, hopefully the game stops in a good way for you there. Shout out to you there, Sharif. I like those little beak wetters there. I also love the beak wetter animation. Also, Microsoft, I did not intend to get the entire position out here. I had yet another stop-related typo. Like I said, that's what I need to get better at. That literally yesterday on one stock, it was Darden. I had the stop. I thought I had set the stop 173.15s. I actually wrote 137.15s and was like, oh my god, why am I not getting stopped? Yeah. Because you typoed Adara. That being said, I still have plans for this trade, and they include adding here if we get to that 435.80s level and bounce. There clearly was some resistance there at 436.40, so again, took out 2/3 of the position. That was planned. The last third was unplanned to take out there, but we'll be getting my beak wetter ready. Or not beak wetter. The beak is dunked. The beak is soaked. The beak is like a dunkaroo. That thing, you can't dunk that beak any more than we already have. But I'll get my 85 area ready here. Yeah, we'll do 85s, and we will do risking into, I like risking to 55, so it was a previous bar low, so cool with that. We're going to be taking that size of position. Let's see, we might bounce off 436, but I still see an uptrend here. Also, FedEx. I've been watching this book, and I'm like, okay, FedEx, what you going to do here? FedEx has been like very stall. Oh, okay, FedEx is a short. Okay, we're going to get short FedEx here. We're going to risk it into 257s. I think that's a realistic level to risk this into. So actually, never mind. I'm probably not going to have the buying power if I do Microsoft. So I'm going to have to make a decision here. You know what? Between these two, what do I like better? I like FedEx way better. So we're going to be getting into FedEx. Microsoft, I also don't think would have bought me anyway. So we're going to do 48s. And we're going to get involved here with, don't typo the order, Adara. Come on now. 48s, we're going to get involved here. And yeah, we're cool with that. We're going to risk it there in, actually, no, I'm not. You know what? We're going to let this set up. I think that's one thing, too. You have to trust, like, you can have an idea, but then if something changes in the book before I enter, I'm going to trust that above all else. Which reminds me of the other stock that I had a last-minute change of heart in. It's going to be Constellation. Right now, though, initially I like Constellation as a short. I actually like Constellation as a long, with that beautiful long-term support here, 235.50s. I love these candle interactions here at 238.35s. That would be the area to go long. Let's wait and watch, though. This thing can be a little bit violent. Those stars are flying. Starships are meant to fly, as was Constellation this morning. So, guys, make sure also you vote for your tickers. Whether you want to look at Constellation, whether you want to look at Tesla, whether or not you want to look at SPCE, which some people are asking about. I will look at that in a moment. Then I think there's a lot of opportunities in this here market. But make sure you'll always look at the balance of evidence. And some of that evidence can be helped there with, Sean and Neil. And I think that's one thing, too. Like, we always look at different tickers, right? Like, we're going to hear Joe today talk about options. Sharif and I are going to look at different tickers. I want to shout out your small cap trades because these are definitely harder to trade, especially, on a show in front of people. So I think that's pretty dope, right? So I think that's great, but we're not going to be able to look at everything, and that's why we love this audience segment. I do want to look at SPCE, though, because some people asking here about SMCI. Wow, that thing is flying. Oh, sorry for the gasping there. 457, that's a huge resistance level on SMCI multi-day. Honestly, I was not planning on trading this, but if I see anything violent at 457, I'm actually going to punch short because that is how much I like this level. And I've realized when you like levels, you have to trust that. So I'm not getting involved in SMCI until 457. And I will only be getting involved on a scalp basis from that point. I would be risking $1 because it's McKee. You don't want to give it too much wiggle room because it will wiggle all over your P&L. I don't like that analogy at all. But that's what's happening with SMCI. Also, someone was asking about my IQ in the chat. I actually don't know what it is. But yeah, I mean, I don't know. I probably did, I did some fun tests and stuff when I was a kid. I enjoyed that type of thing, but I don't actually know the answer. Also, talk about getting wicked out. Coinbase, we were long 166.75. We get stopped at 166.50. Now we are at 169.25. So I definitely need a wider stop for this. But if we make a lower high, we come back below VWAP, maybe it's a short. I have no interest in revenge trading this, though, because you don't want to get revenge on the markets. FedEx now kind of coming to my levels. Happy I waited to see some stabilization there. Clearly missed the CEG long. But yeah, I mean, one great thing, though, is there's so many things to trade, So many opportunities in this market. Make sure you vote for the one you like right now. I see you have stopped playing GameStop. How are you doing?
Yeah, it's good. We got the 75 break that we wanted, but it's true to form. It's on the way up, curling. What a beautiful rounded bottom through the $0.75 level. There was initial resistance there on the way to support there, I should say, on the way down, and then we break through that aggressively. So it looks like we are possibly here on the way back into 21 bucks, knowing full well that the high is more along like the lines of 21.40. So 21 will be interesting for me, even though we broken through it on the day. I'd like to see us break through it again, possibly here before I get re-involved with this name, but a good move here today on GME, curling back up. Still have no idea why it's moving, and quite frankly, I don't care. So here we go. In the other trade right now, IMRX looking to wet my beak at this 305. This is a bigger position because I've had 3 additions into this, defending the volume weighted average price. I could wet my beak here for some profits, but that ain't the move. The move is to take it out at predetermined levels where I see areas of technical resistance and support. If we get the rejection through 3 and it comes back down, then that's trading. So we're gonna have to take the L's with the dub. So we're gonna wait for that 305, and then my next exit for IMRX, if I am able to get that 305, will be a high of day break at 315-ish. We'll see in and around that area. Now we're printing 4s. There seems to be some selling, not the biggest wattage I've ever seen at 304s, but it's preventing us from ascending. So typically, when I don't see big boy lots and I see volume coming in and I don't see price ascension, that typically means hidden sellers, or an iceberg seller. Here we go. Now we're printing 305s and we get the print. So happy with this one. Let's see if we can weasel up a little bit more, right? We want to get some more out over here. This is our second out on it. Initially, I got some, where did I get some 11s or 12s, then added again. So this is a good one so far, but we need to print a little bit more on it, quite frankly. And I'd like that top to get taken off, baby, because this has been one hell of a prolonged formation of a bull flag. And that's kind of what it looks like right now. Up and to the dang right, then we waffle in between that 310, which I've ID'd as a key area of technical resistance, and then that 290, where we know we bounced off, or generally 290, right? It did wick below that. So we have a 20 penny worth of range, and that's completely normal for a bull flag setup. So I don't want to weasel out of this too quickly. It did find its footing at the volume weighted average price, which typically means buyers are still overwhelming sellers. Otherwise, we wouldn't be above VWAP. But whether or not the buyers are strong enough to take set top off, that is the unanswered question. But I think that the odds are more in my favor for that happening than it was about, 5 minutes ago when we were printing 290. We're almost 20 pennies above where we were prior. So happy, here we go. Now we're printing 307s. I'm not taking anything out until that high day break. So we're obviously gonna have to fight with some resistance because, well, it didn't break 314 for a reason, meaning somebody was selling in and around that area. Let's see what GameStop is doing at the moment over here. Where the hell is it? All right, here it is. It's approaching $21, Katina, man, again. And we were just talking about this $21 area. So now I'm all eyes and ears to see, yes, we did break 21 before, but there's new size that's come onto the scene there. And if we were to get a lower high, which is completely possible for GME, it's only up 7.5%. Maybe this one, this whole dollar area is an area where we get that lower high. So I'm not going to be quick to the trigger, quite frankly, until I see a little bit more. But good luck today for GME, man. 7.5% and looking to go higher. What's the volume? So right now, okay, not bad, not bad. It's almost 17 million shares, 16.84 done. Put some respect on that volume's name, so we'll keep an eye on that. Let's flip back to our other trade. What's this one doing? Still whiffling and waffling at 305. Still hasn't taken that 310 HOD, so I'm going to pack my patience there. All right, what's the mega caps doing? Because I'm not even looking today at the future mega caps or otherwise. So the dead one did reach 231 again, or thereabouts. Where's this high take us? 230.95. So we knocked on the door of 231, and that door was shut, slammed in our face earlier as that topping tail candle could not close above 231. Sure, we weaseled up technically above that 231 level into 16s, but all the closing prints still south of that whole dollar level. We'll have to see if Apple's able to take it on a closing basis. It just made me chuckle sitting at home yesterday. And then how fickle sometimes the market is, man. All of a sudden, Min Chi Kuo saying the iPhone 16 sales are below, blah, blah, blah. Then the T-Mobile CEO comes on there and says, the demand is good, and then it rockets. Like, come on, give me a break, but make up your mind and stick to it. Stop being so dang fickle. So we'll keep an eye on AAPL, but people seem to be changing their mind about this more than they change parts of their clothing. So that's kind of what it seems like there. We'll keep eyes on that. Meta, very strong right now as I look and compare it to some of these other Mag 7 names. It's coming into that consolidation area high. We know Meta absolutely printed up multiple storms yesterday, breaking into all-time highs. And look at that V-shaped recovery, taking out that 1040 top right there, still below the implied balance high, which weaseled up almost into 564. But what's important to me is not that 564 level, essentially this double top on a closing basis here at 562.5. I want to see if Meta can take that up. That top off, but right now it seems awfully strong compared to Mag 7 counterparts there, Adara.
Yeah, I mean, I just got out of Coinbase because I should arguably not have shorted this in the first place. Okay, to be fair, I liked it. I liked it initially on the book here as we broke below VWAP. I was like, okay, makes sense, whatever. We can maybe add if we get below 168, risk it into 169s, all that jazz. Then I get involved, and initially the book is looking good, and then we start doing a bid creep. And you guys know that is one of the things I find the most bullish. So I didn't even let my stop hit. I've learned with these spready stocks, if you think you're going to get stopped out, you have to front run that because honestly, with house stops, you'll probably get, honestly, a better situation than the stop. So I actually got stopped out. Or, I mean, I stopped myself out. I would have gotten stopped out anyway. I was just like, ugh. Next trade, should have risked more in that long, given how good the opportunity was, given that it was a good playbook trade, whatever. Happy I didn't short FedEx either because, man, this thing just sat for so long. At 256.69, 256.70s, to the point where I wonder if like sellers and buyers are just laughing at the fact it was 256.69. They're like, oh, this is fun. We'll just keep it here. Like it stayed there for an exorbitant amount of time. Now it's breaking out. My big level, though, of resistance here on FedEx is going to be that 259. So let's see if we get there. If we get there, we reject. I shall be taking a short. Microsoft, in the meantime, while I was fiddling around there with Coinbase, should have been making some coin on Softy because Softy still holding up about around that 235.80. But it's certainly, oh no, this book gets really, really skittish. You just see it here now. We look like we're going to be kind of bullish. Then we start pushing back to the downside. We bounce off 436. That could potentially be long here, but I honestly think Microsoft is a bit skittish for me until I see a push above 436.40. We didn't even get to that level. Like I ended up getting this out here earlier. Initially, my out was at 436.40. I realized we weren't going to get it. I moved to 30s. So that is clearly an area that Microsoft is scared of. But you know, Sean, are you still short Tesla? Yeah, I was just going to say, oh, Adara, you don't need to trade another ticker, but oh my gosh, I love Tesla here. This is like upsetting me. Look at how beautiful this VWAP support resistance flip is. He's also short the market. I would like to see, for my purposes, for my trading style, I'd like to see it break below VWAP first. That's just who I am. Also, because sometimes when you have a support resistance flip like this, even if it's near VWAP, even with these topping tail candles, it could flip to support. So I want to wait for some more confluence before I get my old self involved. Yeah, I honestly, guys, I don't have many ideas here right now on this market. I do want to talk, though, about the strength in CrowdStrike. I was seeing apparently there's a positive analyst note here coming off that Goldman Sachs conference, but that Goldman Sachs conference was last week. They also, this week, we had an investor briefing for CrowdStrike. CrowdStrike, for me, I saw this 290 area, didn't get involved. That was an L on my part. Look at that. Oh, look at how. Talk about a rounded bottom. I would honestly argue this is a bit of a rounded bottom in the wild here, Sharif, even though we have that a bit of a double. Yeah, either way, we curve, we slide, we push higher. Good look here for CrowdStrike, but we know 300 was that big level from which this guy quadunked when it had its outage on July 19th. Will it be able to survive that post-outage quadunk level? I have no idea, but we'll be looking out, like I said, Tesla for me, Softy for me, bit of FedEx for me, Coinbase, I will be avoiding unless we break below 168. But also, you know what I hope we're not avoiding is voting for your tickers. Pick whatever ticker you're looking at, exclamation point, join, space, $, that ticker. I don't know why I turned it into a pattern, but I can. Some Palantir on Palantir Day. speaking of which, Palantir, I like honestly, this uptrend was dope. Getting long off VWAP, you would have been fine. Getting long anytime this thing had a higher low, you would have been fine. But the reversion trader in me is saying, oh boy, look at this rejection here at 36.42s. Hard rejection earlier. I don't know why I said it like that. Now we get not one but two topping tail candles of rejection. We know if I switch to the 3-minute, you'll be able to see there was a heck of a lot of ranging earlier in Palantir. Does this thing want to range yet again? I would not be going short until we get below 38s, because that was a bit of an area of support. We get below 38s, I'll risk it into 43s. Again, I know I feel like I'm trading a lot of tickers, but if a setup sets up and it's not there in my other tickers, like I think, again, as Obi said, and a conversation I learned a lot from yesterday, trade the setup, don't trade the ticker. If the setup shows up here in Palantir, it's pretty Palan clear that I shouldn't have any Palan fear. And I'm going to stop torturing you guys with those rhymes now and those puns. I see, though, 21 is doing something for you here on GME. Are all your stops set? Are you good?
Yeah, I'm good. Thank you. We're going to shout out the Katina man, who was nice enough to get me shorts while he's trading, and the Neil does as well. So shout out to both of them. And I also want to tell you that for 1,000 shares, $1.20, $1.20. Shout out to Real Dang Trading. Real Trading. It's not Real Dang Trading. I'm sorry. It's Real Trading, guys. That is the prop firm for whom we work, and it is the best prop firm around these parts. You can just tell by the awesome price that I was able to pay for such sorts. So we already wet our beak on a little bit there. Nice little 10-penny winner. I saw topping tail come in on GME. This is what I'm looking at here on the 5-minute chart. I never want to place too much on one candle, so my stop is placed above this candle over here. This could be, a double top of sorts. We'll see what we get there, hence why I de-risked. I will be looking to add into this one if it continues down, knowing full well that the current position that I have here, I will get stopped out of if it breaks into a new high. I'm looking here for an area of resistance in and around that $21 area. That was why I was saying, look at 21, possible resistance, this, that, and the other. So we'll keep an eye out. If this one breaks above 21.10, I am gonzino on that. In fact, I have to adjust set stop. So we're gonna go ahead and put that, and then we're gonna get out everything if it weasels its way into that level. So we're gonna have to increase that one, and there we go. So we got that. Let's see what everything else is doing. All right, so IMRX defending 3, fantastic, round of applause. But the thing is, it's not breaking through that 310. And I don't like to hold on to these small cap gappers for all that long, especially the ones that really made their bigger move in the earlier time of day. They tend to fade, you know what I mean? That's why I get excited when a new small cap gapper who just started doing volume comes out later in the day, or even better during the midday show. So here we are, we're coming into local highs again, printing 307 on the ask. That's not where I want to get out on IMRX. I want a top break through that 15 level. I'm not going to take this out at 14s. I'm waiting to see if we can weasel up into a high of day. Now, we just weaseled up into 308, and we were met with some selling. We know full well that the real level is not 314, which is the high of day. It is 310. And that's because every single closing print today on IMRX has rejected 310. So somebody up there likes it as a profit taker, or they like it as a short level. In any event, we're going to have to see if that individual or individuals gets taken out, because my beak wetter is on the north side of that 310. So packing my patience there. I also have another dip trade set up over here, which got removed because I canceled all my orders on OKLO to play the range in the low mid 90s. Look how long this has been ranging between $8.05, $8.05 and $7.90. You have outlying events over here, which don't happen that often, but they do happen. But the range is in play. So I'd like to get the bottom end of the range on OKLO if this one is to be this pattern setup that I look for with these small cap gappers called the volume weighted average price hold, a VWAP hold, high of day break. Essentially, it moves up in the more liquid time of day. It doesn't break down below VWAP though. It consolidates at or around VWAP for the majority of the day. So you build your position into it during that consolidative phase, and then when the more liquid time of the day comes in, when the big kahunas come back on, typically you get a test of that high of day, if not an all-out break. So that's a pattern I've seen over and over and over with these small cap gappers. My strategy with this one, Ram, is to try to build in the lower end of the consolidation phase. So I've ID'd it essentially as, 805, 810, whatever you want to say. To the high side was 790 to the downside. So if that's the case, I want to front run that 790 by putting in my beak wetter at 792. We'll see what we get there. Okay, so we just made another 310 attempt over here on IMRX. We're getting a lot closer to that high. I am quite ambitious with this one. I think we can take out 310 and even take out that top of day. Let's see if there's any big boy size preventing this one from ascending any further. Well, we've got some size here at 10 and literally every other level into 14. Maybe we'll get the break when we get back from Neil's lesson of the day.
Welcome to your lesson of the day today. Hopefully you get that break. I see GME's moving as well, but today I want to talk about massive reversal type days. Now, when you have a day like yesterday, where it was outsized gains pretty much across the board, like literally everything was up unless you're tracking volatility. So that was, volatility is down when the market's up. Everyone understands that. And how you try to separate things the day after, because it's crazy. Usually when you have a strong market and things breaking out, you want to look for strength and continuation oftentimes. But you have to find a place where you're willing to get away from it. Like, what is going to signal to you that this is no longer strong when you have such a massive up rally? Okay, I kind of buried the lead here with Tesla. What I buried the lead here, but Tesla, here's your upward trend on the daily chart. Higher highs, higher lows, and then a monster. This is a huge level that we just took out, that 235, right? So that's a big breakout where you'd still look for continuation. You could argue as long as it's above 235, it's still going to be holding the upward trend of higher highs and higher lows. When you're a day trader, that doesn't always matter, right? Yes, it's higher highs and higher lows, and in a general sense, you could just try to be long every single day and find a good spot, and you'll probably end up winning more than you lose. But when you have that massive day where it led the market, you do want to have a spot, or spots, I should say, where you're willing to accept that it's going in the other direction. Now, it closed at the highs, which makes it pretty obvious. Now, there were two things to look at for myself. Obviously, I'm going to be able to tell you that I should have flipped short. I did not. But when you close, you essentially close right at the highs, and then you had an afternoon support level. Like when the volume slows down, you had afternoon support right at about 241.5. Confirmed a top. You've got yourself a channel here with Tesla. And the issue is when it does the wipeout bottom, this is the dip buy that you're looking for. It wipes out the bottom at the open, runs those stops, and then recovers higher. So it looks like it's doing the dip and rip. Wipe everybody out. We've seen this in bullish markets in Tesla. And then it does the dip and rip. But it can't break back out those highs. This is the issue. Multiple times it held a pre-market low to come back into that 241.5 and couldn't take out those highs. Now, I'm not saying I flip short. Obviously, it would have been a great opportunity to flip short, and it is what it is. I know Sean was able to get it short. I was not. But you do look at that key price, no break of the high, it can't fly, it goes back underneath that support, and then you start going into a bit of gap fill mode. Now, the best you can do there is say, hey, we have to back off and look for other levels to go long. And not everything is going to be exactly the same, but in a similar vein, AMD as well. Big time move. And this is a little bit weaker than Tesla and probably why I favored it for the short. It had already pulled back off of the highs. Your support level is where it failed. So it fails a lower high. I'm going to like a short more if it fails a lower high in a situation like this. So fail the lower high instead of the exact top, then failed underneath support and just a consolidation under for a drop in. Now notice where it happens to bounce on AMD. If you zoom out, there is your help. But the fun is where you can find something that is still strong. Or like those are obvious examples where at the bare minimum, if you were waiting for continuation on that higher time frame for the long, you had to give up at least until some really big bottoms on AMD and Tesla. But the one where you didn't have to, and you'll distinctly different, is Apple. Now, what's different about Apple? Like everything else, it pulled up, pulled back from the highs, There's your support at 227.5. I mean, it doesn't even come anywhere close to that. That's obvious strength. If it doesn't come close to that when the market's dipping in, I'll zoom it back in for you. At the close, your support's at 228.5. Notice where it doesn't even go at the open. It doesn't go anywhere near that. And as a matter of fact, its support ends up being right at the resistance from yesterday. So this is an example of a stock that in all the midst of that downturn holds the higher lows and the top end of the range. It never breaks down. It never even retests that support. So when the market was tripping, this was the place that you could stick with the overall trend. And all of those, everything I was pointing to there, I mean, AMD was in a slight upward trend. Apple's in a strong upward trend. Tesla was in a strong upward trend. But just because it was a massive day yesterday, it's not as simple as I like stock, I go long stock. Some of these names lost major support, and you had to break away from that short, at least temporarily, to find re-entry points. Apple gave you the range much more easily. Holding the top end of the range is important. It's not as if it was holding above the highs. It's not super, super easy. Maybe you had to find the other side of a trend or find a solid entry point, but you knew what you should be looking at or shouldn't be looking at. And I'll give you one more in here just for argument's sake. I didn't trade Meta, but Apple, that's an easy long, I think, or easier long. Meta was more of a tricky one. However, remember where we started with AMD and Tesla. When you hold that top, and on the 15, it'll probably look like a bear flag, a bull flag, but on the 3-minute, all it looks like is afternoon support. There's your afternoon support level. Meta has an inside day. Some people probably think that's, rejection. That's trapping some people long. It's going to dip down, but it holds on to afternoon support. So Meta, again, a relatively strong stock that if you're patient enough, now I wasn't in Meta, is what it is. In fact, I sold some Meta yesterday. That always looks good 24 hours later, doesn't it? Not. But no, you got to take profit sometime. But at the end of the day, you hold on to that higher low. You hold on to that support. I love grouping stocks into buckets. You know, if something's in the long bucket, keep it in the long bucket till proven otherwise. And then other times you might have something which was obviously in the long bucket, like a Tesla and AMD yesterday, that you've got to take out for the time being because there's a key level that got held or did not get held. And sometimes I put it in the penalty box for a hot minute. And you're not willing to go long when it's beneath a certain price. And I think that's perfectly fine. It gets back above. You don't need to have the bottom. Example, you don't need to have the absolute bottom on a Tesla. Like if it breaks back out above 241, maybe I'm going to start liking again back into those highs. You don't have to have that low of the day. You just have to be with the trend. And the trend is your friend until the end when it bends. But it's easy to get trapped the day after a massive up day simply looking at all the stocks that worked so well, wanted to jump back into them and only search for longs every single price. Sometimes you have to find those areas where you give up, and for other names, you got to find those areas where, hey, they're confirming it's still a buy. That's your example on Meta. That's your example on Apple. It was the other way for Tesla and AMD and probably a host of others as well. So always be careful the day after an exuberant up day. Do not get trapped just thinking, hey, we're in an uptrend, I can buy every single price. For day trading, it's not that simple. You want to swing it, that's a totally different story. You're holding for that trend. Your lesson of the day, be wary of just dip buying everywhere when you have a massive, massive rally like we did yesterday. Massive.
Thank you very much, Neil. Informative, eloquent, and just all around awesome as always. Neil Roberts, ladies and gentlemen, every day around that lunchtime, he drops that Neilage, otherwise known as knowledge. If you like what you heard, join us every day around that noon hour. Thank you again to Neil. All right, I want to talk a couple about my trades over here before we throw it to Adara. Ram, I got short again on the GameStop. I don't feel like I'm 50. I'm not. The game don't stop. I like it. Shout out Ram. I actually wanted to DCA aggressively into this to take advantage of the double top at 21.40. I didn't get my add in. I got short 21.25 and I took everything out at sevens and I didn't get my add. So I'm really kind of upset about that. This is an obvious double top. Even if it didn't manifest, into a double top. Your stop just goes a few shekels above it. I mean, the high of the day is 21.45. Throw it like 10 pennies, 21.55. Give yourself some room. If you don't want to even give it 10 cents because that doesn't work for your R&R, put it above the half dollar. Half dollars tend to be areas of support and resistance anyway. So I was happy with this trade. We're going to shout out the Katina man for getting me this again. And we're also going to shout out Real Trading for costing me $1.20 for 1,000 shares short. That's a hell of a deal in my estimation. Trading at 21 right now. Second short I've had on it, second profitable short I've had on it, and I've taken a long as well. So 3 trades on this one long, 2 shorts, all profitable. Happy with GameStop today, not one that I typically trade. All right, this other trade I'm also quite happy with, IMRX. Broke the top, and I took it. I'm still holding a piece for the dream over here. We're long at 290s. Excuse me, long at 290s at this level for this area defend. Took out everything at 314. The high of the day did break up, though, into a new high of the day, 317. So now my question is, to myself, that is, do we continue to make higher highs and higher lows? Because we certainly are at the moment. You don't need to be a chartered market technician to see that. Do I look now to add at a key level? Well, to me, it looks that way. Where do I add at a key level, though? Do I base it off a moving average to try to shadow a moving average, to try to get in on a quick glance of, you know, a quick touch of the 10 exponential on the 5, or do I look to a key level like $3, right? That's what I'm having trouble with deciding at the moment, but I do want to get more into IMRX. I don't want to say it's predictable, but for a bamboozling stock, and you should default automatically to thinking or to believing that these small cap gappers are going to bamboozle you. It doesn't take that much money to manipulate them. So in my starting point, my first principles with this is that it's going to bamboozle me. How it's going to bamboozle me and how I can work around the bamboozlement. That's kind of how I think about these ones. So I don't want to say that it's a reliable one, but what I did like about it was the very staunch defending of the volume weighted average price once it did work its way down to it. It was like one of the only times on the day that it dipped and touched VWAP. Prior to that, it had been doing it during the power hour, which is awfully volatile. This part over here is what I'm talking about, that 11:30 dip into VWAP. Got bought up quick as you like, and I did get more at that 290. So I'm proud of myself there for having the compunction to add at that level, Adara. So what are you looking at?
Yeah, I just got started with the Tesla long. I know I initially said I like Tesla short, but I did say it with the caveat that given how we had that as previous resistance and how we were bouncing off VWAP in spite of the topping tail candles, I did consider a long. I was a bit more aggressive here, but it was because I was really seeing stuff I liked in the book. Initially, I liked that 239. 95s, then we push up all the way to 50s. I don't get involved. I wait. We get back to 95s. I get wicked in. We push higher. I added 30s and 50s based on what I was seeing on the book, both on that way up and in the previous push upward here. I am not going to get back in this name as of right now, but if I see a bounce here off VWAP, I'd be tempted to do so. I'd be taking a smaller position. I'd be getting long probably around 85s, risking about 35s, smaller position, trying to build into it. But as of right now, I'm not super seeing it set up. That being said, am I happy I took it? Absolutely. And the thing is, too, you can lose and have the trade still not be like a losing trade from a process standpoint, right? Like I know when I showed out, Sean yesterday was saying, P&L being key, and I fully agree, but I think until, I have to work on my process, I think, before I can focus on P&L, because if my process isn't green, then I really have no business trying to take trades, right? At that point, I don't think I'm trading for the right reason. And really the reason I'm trading is because I love these markets. I love being here with you guys. I love, putting here with Sharif over on this desk. And I love this community. So with that in mind, Coinbase. So we had one trade that was a good idea and just did not risk aggressively enough. We had another trade that, I managed appropriately, but arguably shouldn't have gotten into. Will we get a third trade on Coinbase? Well, Sharif and people, that's going to depend on what we do here at 168. Why do I care about 168? That was a huge double bottom level. We broke through it like it wasn't a thing. We bounced off of it pretty nicely. So I want to see what we do here at 168. The book here, we just got a bit of a bid creep, so I wouldn't go short. The other spreadier ticker I'm looking at here, okay, yeah, I'm happy. I trusted my read on the book because I was like, okay, CEG. Pushing back my chair because this name, every time I want to get involved, CEG's like, Adara, I'm playing hard to get. Don't you understand? Like, I'm already up 15%. Really, what do you want from me? I'll tell you what I want from CEG. I will let you know. So Let me look at my levels on this so I know what I'm referencing. Okay.
Are you?
So initially, as I said, I had a whole trade plan around this that I was never really able to fulfill. It had to do with the 244 rejection. I liked it as a 240.75 short, risking into 242.25. So with that in mind, look at what is basically the top of this little rounded top. That's right, 242.25. At CEG, I'll short you. I want to see what we do here at 75, which is actually fully a support resistance flip. But I've said if you see support flip, resistance flip to support, sometimes it'll flip back to resistance. I think that could be the case here with SEG, but I'm not going to, take this just on, the hope of the stars, because I want to make sure this constellation is aligning exactly how I want it to before I get involved. How are you doing over here, Sharif? Good.
Jay Lee's looking at Boyle. Shout out to Jay. He's always trading Boyle. He loves that tripled levered life. I like that, Jay. Live dangerously, baby. Let's look at the Widowmaker over here, the triple levered Widowmaker. Well, Jay, if you don't mind, I just want to start off with a daily just to have a look at what we're doing, because the NOS boss was or is, I believe, I don't think he's taking it out. He's long or he's bullish nat gas, kind of seeing what he was thinking was a rounded bottom. And remember, from the week that we did last week, those double tops and double bottoms, we know that bottoming patterns take longer to form than topping patterns. In other words, if you get that V-shaped retracement at the top, it's likely to be more violent than the V-shaped retracement at the bottom. Why? We don't have to really get into a dissertation as to why that takes place. It just does. Statistically, it is true. So how does that feature into my yap here on Boyle? Well, if this is going to be a double bottom, Jay, or if it's going to be a rounded bottom, however this manifests, it could take longer than what happened over here. These are pretty violent turnarounds. There's no rounding of anything there. These are sharp-edged V-shaped retracements. That's not what's happening over here on Boyle. So that's what I'm looking at right now. Daily, we're still locked in that consolidation phase, Jay. Let's have a look at how we're doing intraday and how to base that trade. So let's go into the 15, have a look quickly. Oh, what is this, Jay? Do you see an inverse head and shoulders possibly on the 15? Maybe looking at a shout out. I don't know if that was Ram or who that was. The Katina, man, was, yeah, shout out to the Katina, man. Look, it's tough to say, but this looks like, that left shoulder, the bulbous head, and then the right shoulder, and then we break out through this neckline over here at 9.5, 9 2/3. We'll see, Jay. This could be a neckline as well. We're well above yesterday's high, the previous day's high. The only thing that's left to contend with, obviously, is this $10 level going back to the 17th, so the beginning of the week, or close to the beginning of the week. So that is what I'm looking at right now. Boyle, Jay, also, if this retraces, I like this 9 1/3 level. Look at this flat top that we put in essentially from 8 a.m. till almost the bell rang. Yeah, till 15 minutes before the bell rang at 9.65, so 9 2/3. If we come back to test that level, that could be an interesting flips from resistance to support. That could also be another look on Boyle. Let's look at the 5-minute over here. Very, very respectful of the 10 exponential moving average on the 5-minute chart. Ever since claiming it on a closing basis at 10:15, Jay, we have not printed anything, wick or otherwise, below the 10 moving average on the 5. So very directional, very momentum related right now. It's a good look. I base my trade following this trend following system off the 10 exponential, because it's shown you its propensity to bounce off it on every occasion or just flat out stay away from it altogether to the high side. So Boyle looking real good over here, but I really want to participate in the move back up in nat gas. When that move happens, and if that move happens, I am of the belief that it becomes a violent move up and a prolonged, sustained move up. Look how long it's been moving down, Ram. We cannot catch a break on this damn commodity. Like, look at this. Back from the pandemic, May 2022, this thing split adjusted, Jay, was $2,800. I know it's a triple levered ETF and there's decay and there was a 1 to 20 split. I know all that. But split adjusted, we were at $2,800. And, one of the things that John J. Murphy says in his textbook, and that's also echoed in the chartered market technician materials, is that these commodities, when they trend for way longer than equities. And I don't think that there is a more apt example than the shellacking that Nat has been getting for the past 2 years. This is ugly. So I don't anticipate to stay this way forever and ever, but yeah, I want to participate in that move up, Jay. Intraday, though, I like it off the 10. Right there.
Oh, yeah. Okay. So I know I just waxed poetic about, I like CEG as a short. But then I was like, Adara, I like CEG as a long. Now, why did I get long where I did, you may ask? And honestly, valid question. Very likely, because I did get long here. I mean, we're already $1 in the money on this, but I got, okay, and sweet, we already got filled half the position, okay. So why I like this long is because initially I was gonna get involved here 242.25, so that was a level I liked previously as resistance, so it would have made sense to support. The reason I didn't was because I was like, oh, well, like, I don't know, maybe wait for the move. Then I see us pushing higher. We were so bullish on the book. I was like, Adara, no regrets. Also, we don't trade emotion, so whatever regret. But Adara, you're going to kick yourself if you don't get this trade. So I'm not kicking myself. I'm not punching myself. I don't know why I use this analogy. We are happy with this trade. We just made a new high of day here on CEG. And again, the reason I like this level was because I watched the 244 interactions on the book when we had this breakout at the big desk. Like I said, I do not trade in the morning, but I will absolutely watch the markets in the morning. We're going to move our stop here to break even just because we did have that push higher. So we're going to move that stop to 242.51. Let's see what we do here. And we are also, honestly, if I see a nice little bounce here, 240, what is this? This kind of this top of this range. I'm willing to add. Let's see what happens here. Happy I took it off the position. Happy I de-risked. I risked an appropriate risk unit here, but this obviously was a bit more, kind of, it's not a small position, I'll say that, but I'm really happy with what I did. We now have half left, and we're ready to get this move. This is the type of trading you need to be doing. This is a 1-to-1 risk to reward ratio, because I think I forgot. Sorry, this is a 3-to-1. Because I forgot to mention, I was initially got long here at 242, risking to 242.50, risking into 242s. Sorry for all of the blah, blah, blah. This is a really exciting trade, so I'm just trying to let my brain process the excitement of this trade here. So basically, I realized that instead of a rounded top, this is going to be bull flag. That's why I got long. Rant over. Trust what you read on the book. Also, Tesla, Quidunking, I want to shout out to Sean there. Sean is, I'm sure, very pleased as punch. That looks like, is that a $5 club?
Nah, just $1.
Oh, you just pressed it a lot of times. Thank you.
2 on Apple, 1 on
Pardon?
2 on Apple, 1 on
2 on Apple, 1 on Tesla. So a total of $3 in that club are boogieing it up there with Sean.
There you go. We just got to fill.
Oh, Sean just got a fill. Also, guys, if you want to vote for, if you want to know more about the Tesla trade, if you want to know about any other trades that Sean and Neil, the Katina man and the Neilage themselves took, get in that chat, let us know. Exclamation point, join, space, $, ticker. Also, CEG, keep doing that bid creep, girl. Do your thing. 21 or do your thing 243.14s. I'm really happy I took this trade. I'm not adding right now because I'm not seeing anything that's really conducive to an ad, but man, am I happy with what I did in this trade. If this 75 area on this week basis kind of bounces, that'd be really dope. But man, sometimes you got to have confidence. You got to have confidence. I don't know what you call it, but you just got to believe in that trade and you have to believe in your style. As Opie was saying yesterday, don't trade the ticker, trade the setup. For me, this is an A+ setup, and I think I get an A+ for execution as of right now. I'm kind of joking, but what are you looking at over here? You see the IMRX has been X'd out there.
Yeah, so we took out IMRX at the $0.25, so I'm really happy with this trade, but it's still continuing to go. So my question to myself now is I'm waiting for if 310 comes in, because we were yapping about how 310 was an area of resistance on the day, and I'm still convinced of that. So here we go. We're going to put that order in to go on this name at 311. We're going to front run this the level at 310. We'll see what we get there. Very, very, I'm happy. This is a bigger trade for me. I had much larger position than I typically take, and I don't trade big on the show. That's just my style, and so that's the look there. So good trade, happy with this one. Let's see if we can get some more into it at 311 IMRX. But I see Tisha loves her small caps as well, and she's looking at GXAI. And Tisha, I didn't even really have eyes on this, quite frankly. I had missed it. I was so focused on GME and IMRX that I completely negated to look at GXAI, despite the fact that it's the #1 gap scanner right now on my list. Put some respect on this one's name. Up 72% since the bell rung. All right, well, here it is. This is a minuscule company, guys, and I'm sorry I butchered the word. $4.88 million market cap, less than $5 million, even after this pump today, 75%. We're talking about 25 million shares having been traded on the day with a float of less than 1 million shares. We have 867,000 share float. That is quite small. That reminds me about these Chinese listed companies that are trading like at 500,000 shares. GXAI also has a decent short float, Tisha. 10 1/3%, or so says Trade Ideas. By the way, Trade Ideas saying the same float as my platform. So it's nice when those two conflate because they often don't. So keep an eye on this one. Good defend right now at $4. I don't know how you feel about this one, but there does seem to be 3 bottoming tail candles, all of which have bounced off $4. It looks like I am now in IMRX at 310. So we put that dip trade in to defend for 310. Do we hold here? So I'm going to have to pack my patience because I didn't have my stop on this. When we're holding 310, let's see if we can get up a little bit and maybe wet our beak in the high teens. Now, the stop for me is going to have to go south of 3. Doesn't make sense to have it below south of 3, so we're going to go ahead and do that. We're going to put our out there, and we're going to see if we can get printed quick as you like, possibly into a move back into the fifth of $1. I'm waiting at 20s. We're already printing 16s. So let's see if we can weasel up here. It was a big down candle off a new high day. That new high day is $3.29. It does this candle of indecision, kind of a topping tail candle, comes down into 306, printing 17s. Let's see if we can weasel up a little bit more. Doesn't seem to be too much size sitting here on the book, but you know how these small cap gappers are. They're not really going to show you the full picture on the book, right? Because mostly going to be hidden sellers. So let me know how you guys are trading this. Shout out to Tisha. It looks like she's still in GXAI. No, thank you, Tisha, for bringing it to my attention because I was so focused on this one in GME that I didn't have the opportunity to look at this one. Let's see if we can take some out over here as this one ascends. Happy with this one. There we go. We get the print. Now I'm seeing GME starting to curl. So let's go back to GME real quick over here. So we shorted this one for the possible double top at 21.40. We did quite well, but it does defend generally that $21 level, Katina Man and Adara. And the thing about this one is it's now defending the 10 exponential on the 5, and it's putting in incrementally higher highs and higher lows. If this one wants to trend back to the high side to test that $0.50, I'm all eyes and ears, but it's got to set up. Now, what I do like about it is it came into that predictable level, the whole dollar level, which just happened to coincide with a moving average that I love for these small cap gappers, and that happens to be the 10 exponential on the 5-minute chart, not on the 1. So we'll see if this one can continue to print its higher highs. I like this one on the day. Don't know why it's going. Don't care. Just want to trade it. Shout out to Just Some Dude. Maybe keep an eye on GSIW too. Slow rise back up from near bottoms. I appreciate you for letting me know that. GSIW. Let's load that up and find out what the situation is. Okay, so this one sold off very aggressively. It looks like it had a good couple of days though, especially yesterday. Wow. Put some respect on this one's name from top to bottom. This thing was up 360% yesterday. Oh, baby. And now we're kind of giving back almost the entire thing. Oh, God, that's disgusting. You okay?
Oh, I'm just happy.
Okay. So this one came back into 10 at 4 a.m. today, consolidated to no end until basically the bell rung, and we're giving back the entire thing. But to build on your point, I think you have a fantastic point, Just Some Dude. We're finding the base at 2.25, and we're taking out these moving averages. So it could, you know, come back into that $4 level where the volume weighted average price is hanging out. Right now, technically, it's 386 on my chart, but good call out by you. I'm going to keep it there for a possible mean reversion trade. And I want to shout out Obi yesterday for taking that Apple short. I was watching the show in its entirety yesterday. And
oh, my God.
Right here.
All right, can you hear the Katina Man? No, okay, so we have to top. All right, so I love this.
God.
This is pretty awesome. Who made this, Sean?
Got my Twitter.
some
Gal
guy
Gadot.
on the Twitter.
I'll be Gal
You're
Gadot.
one-
You don't have to ask me.
You're an Amazonian there, right?
And you're Batfleck.
Yeah.
Yeah. But yeah, why? Okay, I am not the Amazonian of this show.
Yeah, I know. But I don't think OB would be
No, I know, I'm
pleased
joking.
putting his head on a female body. I think he'd be upset.
The intense OB face they got.
Loki? No,
Aquaman.
because he's the Amazonian, but the Wonder Woman is an Amazonian.
And that's why I was
Right?
like, it's not like he would be Wonder
This
Woman.
is hilarious. I
This
love
is
it.
amazing.
Shout
And
out.
You're Batman. So that's actually
Yeah,
dope.
it's-
Because you always say same bad time, same bad channel.
Oh, that's fantastic. I didn't even realize that. I do appreciate you for showing me that, Adara. Yeah, but that's the look there, guys. Sorry, I was just... Did I get stopped out of a position or did I take everything out? What happened? Why am I not in my IMRX trade? All right, so it looks like I took the entire thing out there. I didn't actually mean to do that at 3:11, and it just made a new high. So that's a mistake by me, but that's okay. We're doing well on this one, so I'm not too disappointed, but that was a mistake. So we wanted to add at 310 there. That was the move, and we wet our beak into the move in 320. I was supposed to save a piece for the dream. I don't know why I took out the entire thing, but I want to add again. So quite frankly, going to keep my eye on this one. IMRX is, we're not going to let this one off the hook. Just like I'm keeping my eye on GME. We're going to keep an eye on both of those, doing well on them. We'll see how we do. What's your look at there?
Yeah, I was just, sorry, the reason it was making those excited, I was just really happy because CEG going quite swimmingly here. We're going to move, okay, that's actually basically the same prior bar low. At this point, I'm risking to prior bar low on the 5 minute for CEG. May I have a dollar club, please? The little button.
Yeah.
Thank you. We are almost $2 in the money here. Actually, sorry, we're $1 in the money because I forgot because I took out part of the position. Basically, started building the position here at 242.50s. Was initially risking into 242s and looking to get minimum 244. So 3-to-1 risk to reward, okay? Then I add, because I said I would, look, I've always said, I'll do non-planned ads if I see something in the book I like and I'm in the money. That's what I did here. 240, because I don't want to add, like, I don't want to add against myself, right? That's what I mean when I say in the money. So added 243s, book looked bullish. At that point, I had at the stop at break even. We keep pushing higher here. We're basically, honestly, this is kind of playing a range at this point. Once we've broken up, as long as we kind of stay above that 243s, I'm liking what I'm seeing. Now, here's the issue. The issue is I did not consider the fact that we have not, I don't know if this is all-time highs or what, but I was looking for areas of previous resistance to know where to take out the rest of my seg, where the energy might die a little bit here on Constellation Energy. And I realized there aren't any resistance areas for many moons. So I am like a little at a loss for words here. I'll show you guys the daily chart. I'm just looking at my Benzinga to see if there's anything else, or not my Benzinga, I'm looking at TradingView. And then my chart turned off. But basically, this is such a big gap up that it's a little bit harder to find potential areas to take out this piece. So at this point, I'm going to wait and see what happens. If I see anything that's kind of giving me the heebie-jeebies, at that point, I would be getting out here. Wow, the coin daily chart is gross, but that is not what I want. I want the CEG daily chart. So this is what I mean here. Look at how strong this is, right? So I'm basically, what I'm going to do is I am switching off the show at 1. We will get to meet Joe. I hope you guys enjoy that. That'll be really, or enjoy that. It'll be a really good time, I'm sure. So shout out to Joe. Give them all a very warm welcome. But yeah, basically, I'll be getting out of if I don't get stopped out of CEG at prior bar low before that point, I'll just take out before I leave the show. That's really what I'd like. Right now, though, we have a high of day here, 244.78. Previous high of day was 244.38, I believe. So let's see if we push higher here. Right now, I'm liking what I'm seeing. And, you know, as Drake said, got a lot of people trying to strain you of this energy. Right now, I am not trying to be drained of any energy in myself or in my Constellation Energy trade. Was I looking for a reason to quote Drake? We'll never know. Yes, I definitely was. Also, Rivian, Thomas Kondo asking about, shout out to Sean, who had Rivian short, I believe, earlier today. Oh, still has Rivian short. New high of day for CEG. Okay, we are $2. We're 2 points in the money there on that CEG. 2 points. I'm so happy with that. But wow. Rivian, okay, this is an umbrella handle initially. Into VWAP. Into $13, very bearish. Kudunk. Then we do bear flag. Kudunk. Umbrella handle. Kudunk. I'm not going to say Kudunk a fourth time, but you know what I mean. Rivian making a nice little bottoming tail candle here, though, at $12. And guys, you only have about an hour, 10 minutes left to vote for your ticker of choice. Exclamation point. Join. Space. $sign. Your ticker. Wow. Also FedEx, which could be, you know, something you're asking for. If honestly, this thing delivered profits. If you got long, 254, which I did, and then I got out really early, so things to think about, but nice look here. I said I'd be looking for resistance at 259. FedEx is like, yeah, Adara, I don't care. The other maybe area is 261. Either way, I'm not getting involved in this right now. I'm very pleased as punch with my process there on CEG. As I said, when the process makes sense, when you're doing trades that make sense for you, things will follow. In this case, this is like very much a playbook trade for me in that it is a spreadier ticker doing some support resistance flips. And I think I traded appropriately. How are you doing though over here? I see Gumme on your screen.
Yeah, missed this one. Went to the bathroom super quick, and this one's not going to give you too much time to make up your mind, and it's not going to give you too much time to even punch into the position. So you better be ready, baby. And this is what I'm talking about. Did you see that violence that it just moved up into the 30 penny area? Good look right now for GME. It's putting in higher highs and higher lows, and what I'm looking at is my 5-minute chart because I think that the pattern is much better reflected when you look at it on a bit of a wider time frame. Look at this. This is really putting in incremental U's. And it's, initially, obviously, we're respecting the 20, but it doesn't mean we have to respect it forever and ever and ever. No, that respect is going to move up right now. And right now, it looks to me that it's respecting the 10. You could make the argument that it's bouncing off the 20. Okay, sure. That's equally as valid as well. My only concern is, well, I need, in order to trade this and trade it successfully, Ram, I need to get a new high day break. And we're not that far away from high day, right? We just printed 2130s. The high of the day, as you can see depicted there on the right side of the chart in the green, is 2145. And I'm not saying, a high day break is out of the realm of possibility. Obviously, it's not. We just took the high day break on IMRX, but GME, with no catalyst. I got shorts, Ram. Thanks to the Katina man. I'm looking. What I did right now is look at my news blotter to see if anything else came in for that. Let's check Twitter, see if the Catman's up to no good over here. We're gonna Google quickly. We're gonna Twitter. We're gonna go into Twitter. Quickly. I don't even know where it is, Ram. Here we go. That's good. I don't go into it that much. So let's go. Roaring Kitty. Where is he? Yeah, hold on, Ram. He's roaring up a storm. Okay, so last time he tweeted, sadly, it was the this one where he was dropping Chewy, right? So that looks like the last tweet he's dropped. Prior to that, it was Chewy. So literally, these are his two back-to-back tweets. One, he's pumped about Chewy. Then the other one, he's dropping it. Or we're assuming it's Chewy, right? We don't really know. We're assuming just based on the picture. So no Catman. That is Chewy's local. Yeah, I know.
6.6% position in Chewy. That was a thing too. But we don't know yet if he's dumped it.
Yeah, we don't know if he's dumped it. We'll have to wait until, unless he tells us, unless he has to file something. But I don't think is he a big enough shareholder that that he has to tell us when he sells that? I don't know what the rules are. We'll have to keep an eye out on that. In any event, keeping an eye on GameStop, no question about it. Tisha, I don't know what's going on with your GXAI. I was looking at getting into this one, Ram, right around that 390 area because it was bouncing off the volume weighted average price. But Tisha, this one looks like it wants to make lower lows and lower highs, and in fact doing that since about 12:10. Every successive candle has a lower high and a lower low than its predecessor. So GXAI looking like it's putting in possible double top. Now, if this does manifest into a double top, and I'm not saying it is, what's the neckline for that conservative entry that we talked about? Well, it looks to me around 370, maybe 3 2/3 in and around that area. GXAI has been a rocket ship today, but looks like it's given back some of the move now. IMRX is absolutely not. Still very much respectful of the support level being presented here by the 10 exponential moving average, and every wick has either bounced off or closed above that IMRX level. So I'm going to pack my patience here. Lots of small cap gappers off which to base trades, and one might set up awfully soon. What are you looking at?
Yeah, I'm getting out of the CEG here, and that's just because I saw stuff that looked really, honestly, it was super bearish on the book, so I just do not feel comfortable being in this trade anymore. Basically what happened was we got a topping tail candle here into 247s. I honestly, I could have stayed. To be fair, the prior bar low stop was 244s, but I was just like, Adara, this looks roof. You're not going to be able to take the entire move here either. But we'll never know. Also, thank you to Ramin for sharing an image. And she said, I don't know if this helps or is garbage. But yeah, we're talking about apparently there were $92 million in dark pool orders for GME. And then that's 4.67 million shares. Ramin, it is never garbage. We appreciate it. As we say, say one man's garbage is another man's treasure. So that is our treasure. Also got out of CEG here, got in 243s. Okay, and started the move here, 242.50s, got out 246.13s, took that 3.5 point move there. Pleased as dang punch. I need to be taking more trades like this going forward. So that's the move. And yeah, that is the wild dark pool move there on GameStop. Apparently the game just started for those investors.
Yeah, and that's the problem with dark pool. You don't know exactly when they come in, right? They're reported on the time in sales at the time that you see them, but that's not when they actually took place. The thing about dark pools is they can take place off the lit market, and then they're reported onto the lit market. You don't know when they took place. You don't know who was buying, who was selling, what gateway, or anything like that. So it is what it is with these dark pools, and you just kind of have to deal with them as, part of the market in general. So we'll keep tabs on that. I don't personally have anything at the moment. I'm keeping my eye on OKLO because it is now breaking through this high here, Ram. Putting in great move up. Looks like, this one really is a story of respect around the 20 moving average. So, for the most part, it does hold the 10, but at the deeper parts here, it comes into that yellow line, which is a 20 exponential moving average on the 5. It's not giving you a lot in terms of dollar moves, notional moves here, but very predictable. And it's not technically a small cap gapper, it's a bit bigger. Printed days high right now, 826. Good look there. I'm going to keep my eye on this one. I'd like anything off of 20 personally, but yeah, not going to jump into this one super quick. We do have an ad read that I have to set up for, so I'm going to send it to you.
Yeah, well, we get ready to dip in that pool. I want to dip in the SMCI pool briefly. Thank you very much, to Sharif for giving us the nickname SMCI because I love it. But also thank you to Gaurav for mentioning that SMCI heading into 457s. I've talked about this a lot. 457s is my biggest level in SMCI. Now, massive topping tail candle. This has been resistance for a while here. And I think you mentioned the 1 hour. Gaurav, you can really see it here in the 1 hour as resistance. It is a beautiful range, actually, just that 457. But it's worth noting, it kind of wicks above that too, right? The book also bouncing off 455 looks really bullish to me with that 9 EMA hold. And also, I drew this 455 line a while ago. I actually remember what day I drew it. It was August 29th. And that, honestly, that was a big level on that day. We're clearly holding some support resistance there as well on the 9 EMA. That's a little too much confluence, a little too much balance of the evidence. For me to be comfortable, wow, that was loud. I like it. For me to be comfortable going short there, if it broke below 455, I'd be vaguely tempted to short. I emphasize vaguely. With stuff like SMCI, I'm always going to look at my read in the book first and foremost. My read in the book right now is making me a little skittish. Also, yeah, so I got out of CEG, I think probably too early, got a little bit spooked. To be fair, the violence at that 247 was violent. It was a little bit of violence. I stand by why I got out to some extent, but I also think it could have been a little bit trading out of P&L, which I don't like that I did. So again, I need to work on figuring out what the best way of doing these prior bar breaks is for CEG. Let's see what happens next year, though, on SEG. Not one I'll be getting back involved in, but you know what we can all get involved in, Sharif, is prop trading.
Absolutely.
With a firm like Trade the Pool.
Absolutely. Becoming a funded trader, Ram, means trading with a firm's money instead of your own. At Trade the Pool, you first complete an evaluation by hitting profit targets while managing risk. Once you pass, you get access to up to $260,000 in buying power. You keep up to 80% of your profits while the firm covers the risk. That's ideal. It's the perfect way to trade big without risking your own funds. Are you ready to become a funded trader? Join Trade the Pool. Scan that QR code or click the link in the description. Shout out to the good folks there at Trade the Pool. So we'll keep tabs on that. Just want to load up the TQQs over here. Interesting look on the NQ. We're getting into that 200 exponential on the 5, not a level I typically use, okay? But we're putting all these topping tail candles. I don't want to call them topping tail candles. That's a misnomer. They're basically not closing in at highs. And they're not closing in at highs because I'm assuming somebody's selling them, but they are still putting higher lows. So what I'm trying to say here very ineloquently is what I'm looking for is a possible rounded top over here with a break below 20,000. Now I'm not gonna front run that, right? So we'll see exactly what we get. We're a skosh above that 20,000 point level. We're also above VWAP. But like when you look at the market, there are some strong and some not so strong. Like you see the Teslas is not so strong, Nvidia not so strong. Also Google, another day where it's not so strong, below VWAP. Microsoft trying to recover with a nice V-shaped move above VWAP, but still negative on the day. It really is the story of Apple on the day, as well as Meta printing those all-time highs yesterday. But Amazon's bursting onto the scene here with one hell of a V-shaped recovery here on the Amazonian, breaking through 190 and breaking through that 189.90, which was yesterday's closing print. We're pretty much coming into the close to the high of the day. The high of the day is going to be a 191 break. I mean, how long is it going to be till we get that next 200 touch on AMZN? And maybe Bezos will sell again when we are there. So we'll see. AMZN, great recovery on the day. Also, I should mention to you that I did kind of mention it that Google is at VWAP over here. And I've been quite bearish on Google as of late. So let's see if Google can take the volume weighted average price. It's above 163 right now, but not really breaking through into highs or anything like that. Jay Lee, yeah, good point. TQQQ near highs, but now SOXL is still a dollar low, maybe good one to get long now for an arbitrage opportunity. Shout out to Jay. That's not one that I typically trade, but that's not a bad idea at all. I really haven't touched the Mag 7 on the day, but we're going to keep here an eye on Google. I want to see what it does at the volume weighted average price now that it's worked its way up in there. Also, Meta a little bit sideways now, 564 and change. But yeah, I don't think I'm going to be shorting anything Mag 7 related right now. It's just, except Tesla. Tesla and Nvidia look super weak. And maybe Google if it rejects off VWAP over here, but I'm not gonna front run any of those. Apple is just on the dang way up. It just printed another high day, 231.85. It's been respectful at the 10 when it's come into that level. How many dollars in the money? 3? 250 in the money. The Katina man is right now on AAPL. Shout out to him. That's a great trade. Adara had a 2-banger as well. We're going to shout her out. We're going to keep an eye out on AAPL as it works its way into 232. Guys, I got to tell you, incoming possible resistance on Apple. And let me remove these pivot points here. I'm talking about for swing traders. I'm not talking about intraday. Let me just remove pivots so we can have a look over here about what I'm talking about. So we know that the all-time high on AAPL is at 237 and change, which happened, I believe, in mid-July. That's that print, 236 and change, excuse me, okay? Then we weaseled up in the middle or towards the end of the month into that 232, okay? Look where the closing prints are, though. They're at or below 230. So realistically, 230 is the level that we need to contend with. So are you biased today that we close above 230 on Apple? Personally, I am. And not because I'm involved in it. I just think that it's just very directional at the moment. And I think, you know, the market's always a little fickle when it comes to this one, which is fine. Because it's been the king for a long time now, and everybody wants to dethrone the king, right? So that's fine. 232 is where I'll be looking forward to break on the day because that is the high back on the 29th. Let me give you the exact high, 232.92. So it's more like 233 is really the level there. So we'll see if we can break through 232, but I want to see if we can break break above 232 on a closing base, or even break and hold above 230 on a closing basis, because that's been hard to come by there.
Yeah, so I'm actually long Tesla. It's going to be my last trade I take today because we are going to be switching off soon. And again, I hope everyone gives Joe a very warm welcome. He'll be an exciting option for you in the midday, pun intended, because he will be chatting about options,
yes,
which we like over here. So, and it's also a way easier lesson pun to make than the rounded bottom one. I am not OB, so those are not the jokes we are making over here. But also, I am long Tesla, and the reason I initially, like, when you had said short, like you like the idea of a Tesla short of any of the Mag 7, I also was like, yeah, I like that. And then I was watching the book. We kept bouncing off 239. I was like, yeah, okay, Adara, go long 239. I'm risking into 230. Sorry, long 239.19s because I wanted to see that push into the 90 MA. Risking into 239, so risking 20 cents, looking to make minimum 50 here. So it's like a 2.5 to 1 ratio. It's a weird one, but they don't have to be perfect mathematically. This CEG is still pushing higher. I'm not upset because I missed the move. I'm upset because I got out for P&L reasons, and that upsets me. I should have, and you know, maybe, I don't want to risk it the 5-minute prior bar low. What's the 3-minute doing, Adara? What is the 3-minute doing? Like, honestly, anyways, that's the thing. I think what I'm realizing too is I think this is a sign of progress when you're like honestly like more critical of your winning trades than you are of your losing trades, because with your winning trades you want to know how you could have done better. You want to know how you could have made the process better. To me, I think that's a really, really good sign. And so, you know what I mean? I don't know. I'm still learning, right? But for me, that's key. And I'm not upset that I missed the profit. I'm upset that for the reason I got out. Because to be fair, sure the book looked bullish, or sure the book looked bearish, but I didn't have a real reason to get out. Coin, killing it here. Great look. Wow. Sorry guys, my chart schlooped a little bit, so I'm going to pull up my coin side charts. You guys can see this here still. Look at this range. Breakout. Great look. I would watch though what coin does at 172. 172 was a pretty big level yesterday, and it was near VWAP yesterday, so that would be a level to watch out for in coin, in my humble opinion. But that is just my humble opinion. So Coinbase, really good look here. What else are we? Do we want to look at as we end the day? SMCI. I was talking to some people in the chat about SMCI. I said, you know, because honestly, guys, believe me, if anyone loves the idea of a 457 short on SMCI, you're looking at her. I've been talking about this level for so long, but for right now, it does look a little bullish. Now, if we start getting a bit of an ask creep here, but which we didn't because we just jumped like 50 pennies or 40 pennies, then I think it's bearish. I would say wait for the look on the book. I don't know if I'm going to be at my desk for the last hour of the midday, but if I am, I might provide SMCI book updates because I know we have a lot of SMCI traders here. This is a stock that I find really interesting and really fun to look at. So I don't know if anyone wants the book updates, but I'm willing to provide them. Kyle Simpson saying that's a golden Tesla entry if it continues. Thank you, Kyle. Like, I have no idea. And like I said, I'm only going to show for like 6 more minutes. I'm going to take this trade basically as long as it kind of gives me those opportunities. So I'm all good there. I have, at this point, I'm looking to take it all out at VWAP. And I think, like I said, we're not going to be able to be here much longer anyway, so that's probably going to be the extent of the move. But I like this trade as of right now. CEG is still making me a little bit upset at my lack of progress. But you know what? This thing is you learn a little bit every day. You take every single trade and treat it as a learning opportunity, the good ones, the bad ones, the so-so ones, because it's about your mindset, I think, approaching it. That, I think, is huge. Working on that. Also, Meta rounded top a little bit over here at that 563. I know. Oh, okay, Meta. Or 63.80s. Yeah, I mean, I know you trade this one sometimes. What do you have any looks? I know see.
Yeah, I really need to see what it does off the 10 moving average, but it's into those high days. It's a good look there, 544.50. I mean, it's at the 10, trying to curl back into the 10. Nothing that I have personally on this day for Meta, but it's been a great recovery off the low, breaking through the IB high technically, both on a closing and wick basis, but it's right at that IB high kind of right now. And the IB high, in case you're wondering what I'm talking about, is the implied balance high. Essentially, it is the first hour of trading from 9:30 to 10:30. You can gauge the IB high and low by looking at what the instrument you're looking at printed as a high in between 9:30 and 10:30 and as a low. And then you can gauge the IB high and low, and then a lot of people have, they base their trades off that. So we'll see what we get. Right now, it's right at the 10 exponential as we speak. In fact, breaking down a little bit below it. It's already $1 below the high, but Meta will give you $1 like that. That's just the way Meta is. I mean, if you are risking on Meta and you want 3-to-1, you need to be risking realistically $1 per trade on Meta. Anything less than $1 risk per trade on Meta, you're going to get into some trouble. Number one, because it's volatile. Number two, because it's spready. And number three, it's $500. So $1 means bupkis to Meta. Okay, so we'll keep an eye on that. I don't really have any trades on Meta on the day. I'm looking to see whether the futures wants to exhaust the upward move at 20,000. We're still negative on the futures, right? We're down 1/3% on the NQ, down 1/5% on the ES. The Dow is the only indice today that is green, up 0.1. The Russell is also down 0.5% more, in fact, than that. And the 2-year and the 10-year are all red. So really the only thing that's green in indice world is the US 30, and everything else, including the yields, are all red. Apple continues to print new highs. I don't want to be involved in this name today. I have not traded Apple well when I have traded it. So I'm going to stay away from it, but it looks destined to take that 232 and nary a print on the 10 exponential. Forget about breaches. There's no breaches. Nary even a touch, a print at the 10. The only two candles that did touch were the 12:35 5-minute candle and the 12:45 5-minute candle. Other than that, it's been a symphony of green candles and higher highs and higher lows. We shall see what we shall see there. I know that's a meaningless tautology, but that's kind of what I do. So we'll keep an eye out on that. IMRX coming back into the 10 exponential. I think this one is destined for a bit of a deeper retracement. We've been awfully respectful of the 10, essentially since 11:30 onwards. It's probably time to put in a bit of a deeper retracement. What better level than the 20 exponential around 312, 310, in and around there? It's time for me to load that bad boy up because I may want to get back into that. Adara, how's your look over there?
Yeah, I'm good. I'm gonna have to say sayonara to all you guys right now. I'm just taking a CEG screenshot for my Twitter at TraderTV Adara. Yeah, I mean, honestly, like today was a shorter day, but really proud of the trading we did. This is one of my better days. So CEG, like I said, I should have been a little less conservative with the stop, but Tesla, I was long, tried to flip short there, did not work out, got stopped out. Maybe it was a bit aggressive with the short flip, but yeah, that is really kind of my last trade of the day because we should be probably wrapping up here so we can meet Joe. Excited for you guys all to meet him.
Oh, yeah.
Everyone wishes him a very warm welcome. That's what we like here at Trader TV. In terms of ideas I like, my last look here for the SMCI heads, the SMCI fans there. Super Micro still looking bullish to me on the book. Again, don't know if anyone cares about my book read on SMCI, but it might be providing intermittent opportunities. Right now it's bid creeping. 457 short could be dope. What might even be cooler is if we break above that 1 hour range into 457. But I think I'm going to say sayonara to you all. Ciao, arrivederci. I said that wrong. Whatever word, guys. Have a great rest of your day. Thank you so much for letting me trade some spready stocks with y'all and being here. I will see you all on the flip.
I appreciate that, Adara. Thank you so much, Adara, doing the absolute most in a fantastic way. We're going to shout her out and her excellent trades on the day, and we're going to wait for Joe to come get set up. In case you're wondering, Joe is coming to talk about options. We're going to kind of introduce the lesson that he has on the day. We're not going to go through the entire thing, but we're going to really get involved. And this, for me, is very important because you know I've been really wanting to improve my options game. I've got questions for my man today, real live questions. You know that I'm always in my simulator mode on my platform, not my actual trading in my platform because I don't want you guys to see my account number or what kind of positions I'm in because they are reflected on the charts. So we're going to execute some options trades in the sim today, IRL, because I'm going to ask him about a couple of names that I have my eye on for some options trades. So I'm awfully excited, guys, to talk about options because I suck at them and I'd like to improve. And we got somebody on here who can definitely help me out with that. So super pumped. If you're into options or if you're already getting into options and you'd like to improve your knowledge a bit more, hang out. It's not the first time that Joe's going to be on, it is the first time that Joe's going to be on, but it certainly will not be the last. So we should be having, kind of a running theme where we get this options day, and we're going to have Joe on and talking about that. So I'm super pumped about that. Jay Lee's like, tell him to bring up the DJT 14 puts for today. I know you're in that, Jay. I saw your comment in the morning show. Shout out to you, Jay. I always hope you print one of the OGs in the dang chat. Jay Lee, keep your eye out on Jay's levels too, especially if you like these commodities. Like I tell you to keep your eye out on the big SPY levels for the SPY. Dan, the dang man Emmons for his NQ levels as well. We want to shout them out, doing the absolute most. What's going on over there, Ram? Oh.
I'm right here.
Oh, yeah, I didn't know that, Andre. I was like, what's going on? Nobody's manning the desk. All right, so we're breaking down a little bit here, Andre, on Meta. And 564.50 was the level that, Adara was like, hey, rounded top. Now we're breaking below the 10 exponential, and we're looking like maybe we're headed down into the 20. So I'm going to pack my patience. I've been dying to get a short in on the future. I don't know why I'm itching to short the futures, Katina, man, but we're still down 1/3%. And he's like, he doesn't blame me. So he's feeling some kind of way about these markets over here. And so we'll see. It looks like we are getting some sells now, some lower highs and lower lows on the 5-minute look right now on the NQ December contract.
How's everything going?
You're good? Yeah, do your thing, do your thing. So we're getting a little bit of a sell. We still are above 20,000. We're still above the volume weighted average price. So I don't want to be quick to get bamboozled into this short position, but you're getting some red right now. Meta's throwing in some red, but everything else is too close to the highs for me to get comfortable shorting the futures. I'm just not going to do it. It's not the look for me at this level. We're far too close to highs. I know that there is mean reversion trades. I saw OB take that 3 or 4 banger yesterday on Meta. I shouted him out for that, but that ain't my style. So I'm going to pack my patience right now, and we're going to see exactly what this market wants to do. But this is what I was looking at when I was saying I was seeing topping till candles. You're good to go?
Yeah.
Okay. Here he is, my man, Joe.
Let's on everybody. Hey.
Introduce yourself, my man.
Yeah. So I'm Joe. I've been trading with these guys for a while now, since May. I've been trading since 2022 full time. I've invested previously before. And yeah, I dove into the world of day trading in 2022, and I've been trading ever since. So it's been a good time. Love it, man. Love it. And you and I, we went to the Money Show on the weekend. It was a good time.
We attended a little bit of a talk where the speaker was talking about the wheel options. That's not what we're talking about today, though.
Not today. Maybe another time. But today we are going to touch on credit spreads.
Fantastic, man. I am all ears and eyes and every other sensory organ that I have in my body, Joe.
Cool,
I'm going to be listening to everything. You let me know when you're ready for that lesson.
Yeah, so whenever we're ready, we can, let's see here, get the ball rolling.
All right.
Shortly.
Yeah, you got to bring it. Remember on this screen? Yeah. Beauty.
Here we go.
All right, we're going to get some options today, ladies and gents. So get ready. The market's coming down at 20,000 too, so keep your eye on that.
All right, guys. Yeah, so today, this is the original teach. So here, I'm just talking about something that I imply on a weekly basis just to create some consistent weekly income. So if you're familiar with options or have any type of options background or want to extend it, here, maybe this will help you, and this will help put a little extra cash flow into your account, all right?
Love it.
So let's dive right in, I guess.
Let's get it, baby.
All right, let's go. So as Sharif touched on earlier, we're not going to go through absolutely everything tonight, but we're going to go through a couple things. We'll go through the first 3 chapters. That's going to be enough information for us to digest over the weekend.
Love it.
And then we'll get into it later on. All right, so we're going to dive right in. So introduction, what are credit spreads? Benefits and trade types, the Greeks, technical analysis, even though we're not going over this today, we're going to do the first 3, risk management, and then at the end, we'll look at it like puzzle pieces. Each individual chapter is a puzzle piece, and then at the end, we're going to put it all together. It'll hopefully make more sense come end of it, all right?
All right.
So let's get rocking and rolling. So, credit spreads. What are credit spreads? Credit spreads are a type of trading strategy that involves simultaneously buying and selling options contracts of the same class, either puts or calls with different strike prices. They are an intermediate options trade that utilize a fairly simple structure and have the potential to yield consistent returns. So again, if you're new to options, it may seem a little complex. If you have some options experience, maybe this is something you're looking for. They are the opposite of options debit spreads. And unlike directional trading, buying and selling stock, and your account being debited, credit spreads are the inverse. Your account is credited and put cash flow into your account. Let's keep in mind, option spreads, either debit or credit, are a fixed/capped profit trading strategy.
Okay.
All right? So let's keep rolling here.
Hey.
So why trade credit spreads? This is important. There are multiple reasons why option sellers love trading credit spreads. When trading equities or flat out buying options, puts or calls, we need the asset to move in a specific direction. And in the case of simple options contracts, close significantly above or below your strike price in order for us to make a profit. Sharif, listen to this.
All right.
Credit spreads do not need one specific outcome in order for us to profit. There can be multiple scenarios that happen, and we can still produce a profitable trade.
Love that.
So when I started reading about these, this is what really, really intrigued me and wanted me to dive deeper into the world of credit spreads. So let's compare.
Okay.
So let's examine some common scenarios. bullish case, we buy 100 shares of stock. In order for this trade to be profitable, we need the stock to trade above our entry price. If it goes down, we lose our risk on the trade. If it goes sideways, we scratch our heads and potentially lose money to commission. Only one scenario allows us to be profitable. In a bearish case, all right, we sell 100 shares of stock. In order for this trade to be profitable, we need the stock to go down. If it trades above our entry price, we lose. If it goes sideways, by this time we're bald from scratching our heads, losing money to commissions. All right? Again, only one scenario allows us to be profitable in this trade.
Katina, man.
Hey, that's all right. I just started the row game the other night, too. So, trading credit spreads, we have multiple scenarios where the outcome can end with positive cash flows into our account. The underlying asset can go up with a bearish trade, and we can still collect the premium received from selling the contracts. The underlying asset can go down with a bullish trade, and we can still collect the premium we received. Most importantly, the asset can move sideways, and we can still collect the full premium received from the contracts we've traded. The only scenario where we don't collect the full premium is if the stock goes above our short call strike price in a bear call spread.
Okay.
And the stock goes below our short put strike price in a bull put spread.
Okay.
So you see, with the power of credit spreads, we have 3 times the number of ways to make a profitable trade opposed to just buying or selling stock or single-legged options. All right, so this may seem confusing. What's a bear call spread, Joe? What's a bull put spread, Joe? Well, we're going to touch on this more.
Beauty.
Again, each individual slide can be classified as a puzzle piece, and then by the end of it all, we're going to put it all together, and hopefully it makes more sense. All right? So moving on. Again, types of credit spreads. There are multiple ways to create a credit-based trade using options. In this presentation, we will focus on 2 credit spread strategies that form the basis of credit spread trading. The out-the-money bull put spread, a bullish trade using puts, and an out-the-money bear call spread, a bearish trade via calls.
Can we just take over for a sec? I think
absolutely.
Ram wants to help you out with something. All right, guys, just for a sec, we're just going to focus on the market for a second. Thanks for that, Ram. Guys, we're putting in topping tail candles one after another right now on the future. And this is, I'm really keeping my eye on this because we're not that far above 20,000. We're still above VWAP. What I'm really looking for here is to give way at 20,000 in VWAP. They are one in the same level, and I don't like seeing these topping tail candles all at once right there above that level. So I'm keeping my eye on that, but I'm also keeping monitoring my man Joe because he's dropping hot lines.
Let's go.
My bad, Joe.
And we're back. All right. So again, just to go over what we went, these are the 2 spreads that we're going to focus on today and in the future, all right? So we're not going to complicate things. We want to keep things simple when we're first starting out, right? We don't want to get too complicated. We don't want analysis paralysis. We don't want too much information, so we're going to keep it simple. All right, so these 2 types of credit spreads are built from a combination of 2 simultaneous options contracts, constructing a multi-leg options trade. The initial leg of the trades will always consist of selling or writing an out-the-money call or put.
Okay.
All right? Simultaneously, we buy a call or a put above or below the initial strike price, depending which strategy we are employing. This forms the second leg of our trade, resulting in a net credit into our account. So what I mean by net credit, look at it kind of as you're shorting stock, right? So when you short stock, your broker essentially lends you the shares.
Right.
This is the exact same, Sharif. Your broker or the other side of the trade is paying you to hold these contracts, all right? With our intentions in returning the contracts at a lower price.
Gotcha.
All right?
Gotcha.
Simple. We're keeping it simple, and that's what we want to do.
Love it.
So, moving on. Constructing the spread and selecting the strikes.
Ram.
In order to construct our credit spread, we need to choose the appropriate strike prices. Selecting the wrong strikes can result in a losing trade and or possibly creating a debit spread, which is more of a directional trade. The objective for this style of credit spread trading is to create high probability trading setups that have the potential to generate consistent weekly income selling far out the money options.
Use the bathroom quickly.
All right? So in these basic credit spread trades, the goal is for our options to expire worthless. As I stated before, it's kind of like shorting stocks. So when you borrow, you want to return them at a lesser value. And that's the exact same thing when you write options. You're essentially lent the money, and then you want to return pretty much nothing. That's what we're looking for. This leads us to our next important factor in strike selection. We do not want to sell naked calls or puts. Doing this can be very, very dangerous and leads us to expose to a possible assignment risk. Your broker won't allow you, I'll touch just a side note, your broker won't allow you to sell naked calls or puts if you don't have the funds. But regardless, we still want to cap our losses. So, this, as I said before, this can lead to outsized losses and account blowups. We don't want this. In order to protect our capital and not leave ourselves at a risk of assignment, we must buy the protection. Also known as protective puts or calls, this is the second leg of our trade and creates the spread for us. This is the style of trading we are focused on, credit spreads, all right? So again, hopefully not everyone's too confused. We take it bit by bit, and then we're gonna put it all together, and then eventually it'll all make sense, all right? So the difference between strike A, our short call or put, and strike B, our protection, is classified as the spread. So example, if stock XYZ is trading at $100 and we want to sell the, trading at 100 and we want to sell the 110 call and buy the 115 call, this creates a $5 spread. The key to this strategy is that the protective call and or put is crucial to avoiding assignment risks, outside losses, account blowups should the contracts expire in the money. Our protective option will automatically be exercised by our broker, with our loss being the difference between the spread minus our credit received. Also, most importantly, as I state multiple times throughout this presentation, is that the protective option caps our losses. Sharif, we know that we always want to protect our downside, no matter what in trading, and this is what we're doing here. Risk management. Because options are a leveraged derivative, we need to be more risk adverse in these situations. So
Gotcha.
That's why we're buying those protective calls and puts at all times. All right.
Gotcha.
Good stuff. Moving on. Any questions, by the way?
Good. So far, so good,
all right,
man. Yeah.
We're good. So this is just a brief example of what selling something naked could do.
Ram. Yeah.
So as you can see, Sharif, pulling up an options chain from a while ago, and we sell one put on the Qs.
Okay.
We have a max loss of $47,000 with a max profit of $250. That doesn't seem right.
No, that's
you don't
insane.
want that.
Yeah.
You do not want that.
Okay.
Right? So this is why we buy the protective put.
I see.
Our max loss goes from $47,000 down to $300, right? But there is obviously a catch to it. You can't make as much, but you're not going to lose nearly as much.
That's okay.
Right? And that would be worst case scenario. If the Qs went to zero, that's what's going to happen. But in a weekly span, 3-day span, that's not going to happen, but you can still take a pretty big loss.
Yeah.
So we don't want to do that. So don't worry about the spread or anything else on there. I just want you to focus on the loss for this.
Okay.
All right? So now we're going to sell a naked call.
Okay.
This is scary. An infinite max loss.
That's crazy.
An infinite max loss. We do not want this. Again, in 3 days, is the Qs going to go to who knows what number, 1 million? No, there's very unlikely. But if it squeezes, if you get caught in any type of volatility onslaught, you could be in massive, massive trouble. And we don't want that. So we go from an infinite loss, but when we buy the protective call, we go to a loss of $259. And
wow.
Yeah. So this is why we do it. Again, there's also another side to it. Your profits aren't as large, but what we're doing is we're protecting our downside.
Right.
All right. And that's what we always want to do, is protect our downside at all times. All right. So moving on. So now that we have kind of a general idea of why we want to buy the protective call and put, is to minimize those losses. That's what we have to do here.
Okay.
All right. So moving on.
No, thank you.
So multiple scenarios, key takeaways from that puzzle piece, the key puzzle piece. Multiple scenarios to create income.
Everything okay?
Spread-based trading is fixed profits. The difference between strikes is classified as the spread. Focus on selling the out the money leg initially. Always buy the protective option to cap losses and avoid assignment risk.
Gotcha.
All right? So now, I think this is what kind of scares a bunch of people away from options trading.
Okay.
The Greeks, Sharif.
We're going to get into it.
We're going to dive right into them, all right? And this is going to help us choose a high probability options trade.
Okay.
You may be thinking like, Joe, you haven't really told me how to create weekly income yet or something that's high probability.
Sure.
But we're going to right now.
I love
right?
it.
All right, let's do this. So the Greeks. In options trading, the Greeks are a set of calculations used to assess and manage the risk associated with the potential options positions. They are a financial measure that represents the sensitivity of an options price to certain underlying variables. Each measure has a different impact on the options contract price. All right? So the three main Greeks to focus on for this high probability setup is delta. Most importantly, delta is going to give us our high probability setup. Theta is what option sellers are looking for, especially on a weekly basis. Vega, implied volatility. We can touch on gamma, but we don't need to go too deep into that, and we're going to skip out on rho.
Okay.
All right? So let's get right into it.
Let's do it, baby.
So delta. This Greek measures the change in options price for every 1 point move in the underlying asset, or the stock itself.
Gotcha.
Delta has a range of -1 to 0, or -1 to 0 for puts and 0 to +1 for calls. If the contract's delta is 0.75 or 75 cents, this means the options price will change 75 cents using our options contract multiplier, $75 for every $1 move.
Jeez.
All right? If the options contract is valued at $1 with a delta of 0.75 and the underlying has a $1 move, the options contract will now be valued at $1.75. Simple, right? We're not going to complicate things. Delta in the world of options is also used as I'm going to stop here actually. If you have your pens, papers out, this is the key note that you want to write down. This final point. Delta in the world of options is also used as a percentage metric to help determine the probability of where the contract is going to expire, either in the money, out the money. A delta of 0.75 has a 75% chance of expiring in the money.
Really?
That's what we use. And
that's why.
This is why. So you may say, Joe, why did you use an in the money example? We want our options contracts to expire out the money. And worth this, right? Okay, well, we're going to touch on that right now. So now that we have the basic concept of options delta pricing, we can now see why this is the most important Greek metric for our strike price selection.
Sure.
We are trying to create consistent returns. Those who are familiar with and have extensive experience in trading, having a 40 to 60% accuracy is a really good trader.
Oh, yeah.
All right, with the latter being exceptional. Using our delta knowledge now, here is how we can amp up our trading accuracy and create a higher winning percentage. All right?
How do we do it?
This is how we do it. As we scroll through our options chain, and for our short option, the one that we always select first, we select the 0.1 delta strike. From our previous slide, we now know that this specific option has a 10% probability of expiring in the money. Or what we are really interested in is a 90% chance of expiring out the money.
Really?
So that is the metric that helps you create that consistent weekly outcome. Is it 90% all the time? No. But if you have these calculations set from your broker and people who are a lot smarter than I am telling me, hey, this is probably going to expire worthless, I'm going to listen to them.
Sure.
People who trade options and know about delta is that we use this metric to help determine our strike selections. So again, our goal is for our contracts to expire worthless, allowing us to collect the full potential premium. So that is the key notes. We want to use our delta strike selection to help give us that consistent return in options trading. Again, nothing works all the time in options. Nothing works all the time in trading. But if you have these percentage metrics, like when you're trading equities and you have a solid database and you say, from time A to time B, I have this percent accuracy.
Right.
This is what this is telling us already with each individual options contract.
Okay.
So we have a percentage metric that tells us where this option is going to finish, or going to expire. And eventually what we'll do is we're going to correlate delta with the location and current price of stocks. And then that way you can also gauge, it's like, oh, that makes sense. There's no chance that Apple is going to close below 205 by the end of the week, right?
Which is kind of what I was thinking there, yeah.
Right, so that's how you're going to use it. You're going to use the delta to gauge from a technical standpoint, which we'll touch on a later day, on how you're going to correlate these trades, all right? So again, our goal is for our contracts to expire worthless, allowing us to collect full premiums.
I love it.
So we're moving on.
Can we stop there for a sec?
Absolutely.
Let's use that delta example just because I think
let's pull up
so I've got like let me talk trash about one of the stocks I lost a little bit of money on.
All right, let's go.
Li Auto. Anybody who's been watching the show knows about Li Auto. So this is the example I wanted to give to you today. So this, to me, Joe, looks like an interesting consolidation area. We got about 22 or 2150 to the high side, 18 or 1750 to the downside.
Okay.
So here's what I want to do, Joe. We're near the top end of the range right now. We're hanging out at that 2150, 22-ish area. How do I take advantage of this range right here? Like, let's do this IRL. So I've got my options chain up, as you can see. This is a live one. Everything is live. These aren't screenshots, so this is the options chain. So how do I execute this strategy right now on Li Auto? What am I doing?
So what we're going to do is you like the breakout on this side.
Yes.
So what we're going to do, we're going to look for a strike price below the breakout level that what you're looking for.
Okay, so that 22, 21.50.
So we want to go below that.
Let's go 19 and a half.
We'll
How's
go
that?
19 and a half.
Okay.
So we're going to go over here. We're going to pull up the 19 and a half strike, and we're going to look at the delta on the side of it.
So the delta, it's right there, 0.00.
Oh, no, that's not what we want.
Okay.
So we're going to go lower. Oh, is this on the put side?
Yeah, that's on the put side, yeah.
That's already in the money. We're going to go even a little bit lower.
A little bit lower, but these are all zeros.
So higher, so we're going to go higher.
Gotcha. There we go. So there, 20 and a half.
There you go, 20 and a half.
Right.
So if you were to select that strike, and it's a put, if we were to sell that, that has a chance of expiring. Can you select that for me?
Yeah, 20 and a half right there. It's got a 0.14 bid right there, or sorry, the delta 0.14.
So that's perfect. That is telling us that this contract has a 90%, and the current price of
the current price right now 21.44.
21, and so we're selecting the 20 has a 90% chance of expiring in the money.
Interesting.
So, right? But that's not
what we want. It's
that's
a put.
Not, right? So so that what you showed me was a put, a long put. We want to sell that. So we want to go on the left side of that.
Left side of
that. Exactly.
So there's a 20.
Exactly.
Okay.
There you go.
Okay.
And we pull that up.
And the delta there, you want me to read you the delta?
That's 0.9.
You know what? Let me make the font way bigger so we don't have this issue. Yeah. My bad. There we go. How's 20? 20 should be good there. There we go.
Perfect.
That a little bit better?
Perfect.
All right.
And we love that.
All right. So the 20 and a half is what we're looking at. And then we're looking at the delta. Now we got a 0.988.
There you go. So that almost has a guaranteed that it's going to expire in the money.
Interesting. Okay.
Guaranteed.
And so the way that I execute this, Joe, so what am I doing here? What's the first move? So I like that 20 and a half level. You've now ID'd that the gamma gives me a high percentage of this expiring in the money, this 20 and a half level. What's my next move?
So what you want to do is now we want to buy protection because we're selling the put.
Okay.
So we don't just want to sell the put outright.
Right.
Unless we're running the wheel, which is a totally different strategy.
That's a different strategy.
We're going to go even lower, and then we're going to buy a put. So we have the 20, so we're going to look at something around 18, 19 bucks.
Sounds good. Here they are.
Perfect. And we're going to see how much we collect on that.
How do we do that? What's the move? How do we get that assessment? Like, let's show them IRL in living color.
Our IRL.
So do I go strategy?
We're on the bid, and then we're going to go on the ask to buy it.
On the ask to buy it.
On the ask.
Okay,
all right.
On the bid. So where do I do that? Are you familiar with this?
No, I'm not familiar with Trader Workstation. I use
I know you use the desktop one, right?
Yeah, I use that. So I wish I could pull that up for you there.
Yeah. Okay. Well, it's all good.
So maybe you might have to do something like with a complex order, and then when we create the complex order,
I see.
And then we can create it that way. And when you go to complex order, you'll say, hey, let me select a credit spread on Li Auto,
Okay, here we go.
and then we do that.
Is this it right here?
Yeah, this is
The one. So there we go. We got the buy. What are we buying?
Yeah, we'll start with the sell.
Let's
first.
start with the sell.
Let's start with the sell first.
Okay, let me just put some more strikes over here so we can put about 20.
There you
We get
go.
all the ones that we want. So what are we doing first? Give me the step first. What are we
Okay,
doing?
So
Yeah.
first step,
Yeah.
we're going to sell or short put.
How do I do that?
We're going to go to, we want the strike price of 21.50, was it?
There it is, right here.
All right. And then we're going to click on the bid. We're going to select that strike.
That one right here. Yep, there it is. Okay.
Perfect. And then we're going to go even lower.
Okay.
We want to go lower in price.
Lower in price.
Lower
Okay.
in price. So say 17, and then we're going to punch the ask.
We're gonna punch the ask on that one.
Punch
Okay.
the ask. So we're going to be buying
go.
that put.
Gotcha.
All right.
Interesting. No. So now we have several legs building
Now
up
we have
down here.
multiple legs.
Thank
now
you.
we have multiple legs.
Okay.
And Sharif, the key is when we do this, you say 21.50. What we're saying is we don't think that Li Auto necessarily is going to trade higher. We just don't think it's going to go lower than our short
Gotcha.
price.
Gotcha.
Right? So in real life, that's how we do it. So that's what gives us the multiple scenarios where we can become profitable in a trade, is because we're not specifically going on the direction. We're choosing where the price will not go opposed
gotcha.
to where it will go.
All right.
All right.
Okay. Fantastic.
All right.
I'm just being told that it's just like a lot of information. So
Too
let's
much
leave that.
information.
Let's
Listen,
leave
we're
the
gonna
theta
stop
for
here.
next time. Yeah.
We're going to stop here. Lots of information.
That was fantastic, Joe. Honestly, it
Gets a little
is.
complex, but we'll stop here.
All right. So fantastic stuff. Tell us a little bit more about you, man, because
Yeah.
I've been seeing you on the floor for a hot minute since you've been here in May, but you and I didn't really get to chatting until we went out to the Money Show
That's great.
on the weekend. So, just from what I hear around the floor, you're an excellent risk manager.
I appreciate that. Yeah.
That's
yeah.
what I'm hearing.
Yeah.
Tell us a little bit about that. Some of the
Yes.
philosophy about trading, Joe.
So when I first started trading, I went through a lot of educational processes before I even punched any keys. I was trading simulator. I read more books than I can account for, countless YouTube. So what made me really accustomed to risk is my old trading platform when I was trading at home had a calculated fixed risk hotkey.
Interesting.
So what I would do is I would type in on my calculation is I want to bet $20 on this trade. And I
Okay.
would hit my hotkey, and boom, it would execute and calculate the amount of shares from point A to point B on $20 risk.
I love that.
So
Okay.
for me, always protecting the downside was key, and anybody who has any experience in trading that is the key to longevity in
Absolutely
trading.
agree,
so
man.
it's protecting our downside. So just through a lot of rinsing and repeating, that's what we did. We just used fixed risk at all times. We always had a calculation for our share size and what we are risking. So that's hence why I think I'm
amazing,
a great
man.
risk manager when it comes down to that.
Yeah, and I love that. That's
Yeah.
like your number one mentality. You're like looking, like, how do I protect the capital? I want to be here tomorrow. We always talk about that, right? If you don't have an account to trade, can you even really be around? Like, what's the point,
well,
right?
You can't
Like,
trade. If you don't have any money, then,
No.
and if you're just bleeding money, then I don't see you not going to
Constantly.
last too long. I don't think so. Yeah.
what kind of stocks do you like, Joe? Are you a Mag 7 guy? Are you a small cap guy, or does it not really matter?
No, I would say definitely I'm a mega cap guy. I like the Mag 7, absolutely. But at the end of the day, it's just where the volume is, right? You run your scans in the morning, and wherever the volume is, I like to be where the volume is. I'm not going to fight it. You don't want to fight stocks or anything like that. So, yeah, I Mag 7. If small caps are moving on volume and we have multiple catalysts, then I'm gonna trade those.
Fair.
So yeah, I hold no bias to a stock.
I love that, brother.
I have no devotion to any one stock. So yeah, that's it. So I like trading Mag 7s, anything that has high volume and high catalysts. all right?
Fantastic.
So, yeah, that's it.
Tell us a little bit more, man. I mean, would you look at anything today? Execute any trades? Like anything?
We took a couple trades today. Unfortunately, they didn't work out, but that's part of the game. And all you
Absolutely.
do is you protect the downside. We took some Nvidia earlier today.
Okay.
And we took a couple stabs at Tesla as well. But these you won't see them up on this chart here. But on my other account, you will see them. So yeah, but that's what we were trading. We were looking for a break above VWAP because that's the style of trader I am. I am a VWAP breakup trader.
I love it.
And that's just kind of how I flow. I look for the same thing over and over again every day.
So the technicals, just so we're clear, you're not really caring too much about the technicals, whether you're looking at options or whether you're looking at equities, right? The technicals are what they are. It's the execution and the strategy level that makes a little bit of a difference.
Absolutely,
Is that fair?
absolutely. From an equity standpoint, that's exactly what we're looking for. But from an option standpoint, when we're selling, when we're doing credit spreads, the technicals do matter because Sharif, what we do is we combine the technicals with our deltas.
Gotcha.
And that's how we create higher probability settings.
Gotcha. I gotcha. I don't want to jump too quickly into the other lesson because we didn't talk about the wheel or anything like that. But there was basically the individual on the weekend that you and I went to their talk. He was talking about what is it called? The options wheel, right?
The options
and
wheel,
basically, you're just getting in you're finding consolidative stocks was his theory, and you're basically selling puts for the shorter position, and then basically you're collecting on the premiums.
Yep.
And if you get assigned the shares, you're holding on to them, but you're collecting the premiums anyway, right? One thing that I didn't really understand too much about that, Joe, is once he gets assigned the shares, what's his move with the equities side? Like, he was DCAing to no end. You know what I mean?
He was, and absolutely.
Yeah.
So the options wheel is, and hence the wheel, because it's a repetitive system. So when he gets assigned, Sharif, what he starts doing is he'll start selling calls against that position, right? So if the equity decides to trade higher, he's profitable from an equity standpoint, but he's also collecting the premium from the calls that he's selling.
Gotcha.
Right? So even though what happens is a wheel, and why it keeps going over and over again, the goal is ultimately to get assigned on the calls again.
Right.
So that you profit from your average price on the shares to the assignment strike price on the short calls. And then you just rinse and repeat.
I love it.
So he kept DCAing. I don't know why he was doing that with the intention of being assigned on his calls after he was assigned on the put, because now he's in a position he's no longer
That's what I was thinking, yeah.
Right? So, but he keeps selling calls until he gets assigned.
I gotcha.
And then he'll profit from the differential from the average price of the stock to the strike price of the short call.
Okay.
Yeah.
Let's talk a little bit of trading right now, baby. Let's have a look. So I'm long Apple right now at 231. Issue with this one, Joe, there seems to be a seller at the fifth of a dollar. Someone's been selling right now the last, I would say, 10 minutes at the fifth. Here we go. Looks like we're going to take them out. Let's have a look here at the tape. Are we printed above that? Yes, we are printed above that. So what's the right now? What's the look on Apple? Well, right now we're quite I want to say indecisive, because the range between the 10 and the 20 exponential moving average is almost close to nothing. For whatever reason, Apple has been finding support at the 50 exponential on the 5, and that is something new, because I don't think Apple's been doing that since I've been watching, at least locally. So here we go. We get the initial bounce off 1115, 1120. You guessed it, off the 50 exponential on the 5. Right over here, 120, 125, 130. Bouncing off the 50 exponential on the 5. Now we're knocking on the door of that $0.25. How many dollars now?
No, I went long 238.
The Katina man is long 230.80, reloading his position on AAPL, looking for that bigger move up. We're going to shout out the Katina man and hope he prints up multiple storms. We're holding off a piece here. I'd like to see something around the 50 penny level, Joe. Only reason is there was a whole lot of chip and chop at that 50 to 75 penny level, so I'd like to de-risk. That is, of course, if we can continue to move forward. What are you looking at right now, brother? Anything setting up your way?
Yeah, I just punched into some Nvidia here. We're liking Nvidia where it's going, maybe break towards VWAP. And yeah, I like the consolidative area. We're making new highs here. We put in a potential bottom, it looks like here, so I'm liking that. So Nvidia, the darling of the market.
Oh yeah.
I'm gonna take it long any day of the week, right? So it doesn't matter. I'm going long Nvidia. I'm long Nvidia. So we like this stock.
You like the stock, you like the stock. Tell me, Joe, how are you setting up for the equity? So right now, obviously, you've got your TA that you're obviously applying to your options. That goes without saying, TA's TA. Are you doing anything specific on the book? Are you waiting for your levels to come in? You said you were a VWAP trader. I kind of love that. The Katina man is going to love that too. Are you waiting for those setups to come in? Are you trading the open? Are you trading the midday? Give us the 4-on-1, brother.
So I'm a momentum trader. So I have a time frame, a window where I like to execute the majority of my trades, where I feel that I have the most edge. And that's from 9:30 till about 10 o'clock,
Okay.
10:30.
Okay.
So I'm a momentum trader. Price and the time of sales is my leading indicators.
Okay.
That's always what I'm looking for, a strong time in sales. When I go to enter the trade in a long position, I want to see orders stacking up on the ask, the book stacking up on the ask. And you see on the time in sales, you want to see those clean flushes of heavy orders above and at the ask.
Right.
And that's what we like. So when I'm trading momentum, I'm looking for these specific, and here we are, I'm looking for these specific strengths within the stock. And you can see these through the time and sales. If a stock's weaker or stronger, this is what we like. When I see consistent strength on the time and sales, like the total opposite of what I'm seeing right now on Nvidia, but in momentum drives, when you see those clean flushes, that's exactly what I'm looking for. And that's it. Yeah, that's
Love it, brother.
So
Yeah.
volume, the volume weighted average price,
Okay.
and the time in sales. Those are the key metrics that I use for trading.
I love it. And I love how you said the time and sales too, because oftentimes we're kept down or we're kept up by hidden iceberg orders, which are never really reflected on the level two. You can sometimes get wind of them because there's only small size at the level, yet and there's umpteen amounts of volume churning, but we're not moving. But you can't bamboozle the time and sales.
No, it
Every
doesn't lie.
print's got to
It
come
doesn't
through.
lie.
It
The
doesn't
time
lie.
The time and sales doesn't lie.
Bang.
So that's why we like it.
I love it. I love it. I'm just going to look here. Shout out to the Corleone family. Oh, I better get this one right. Shout out to them. $2 super chat. Please let me know where we're at with GME, bro. So first and foremost, I just want to see if I want to get at this Apple position over here. It's having a lot of trouble with the $0.25. I think I'm going to pack my patience on this one, knowing that we're a little bit top heavy on this market. So I'm unsure. I'm going to take it out here just because I want to focus on your GME question there. Let's bring in the trusty side chart and look at GME, because we had a whole bunch of trades, both long and short today on GME. And let me tell you something. So when I saw this top manifest on GME coming in essentially to the same high, although a skosh higher, 21.45, I was like, all right, and I punched short here. I looked over to the Katina man, and he was nice enough to get me shorts, and we took this bad boy down, but look what it's been doing since that time. That double top did not manifest. How do we know that? Let's go back to our lesson on double tops. It's got a neckline. It's got to breach the neckline for that double top to manifest. Guess what? That neckline held up, funny enough, at the volume weighted average price, and we never came back to retest it again. In fact, what we're doing is we're roughly respecting the 10 exponential moving average on the 5, and we're also putting in higher highs and higher lows. So this one, it's a lot closer to the highs than it is certainly the lows. So I'm not going to pretend like I know exactly when this is going to flush or what it's going to do, but I can put the odds in my favor, as Joe is giving you the example there with respect to options. I can look to ride the trend into key levels. The key level for me here is going to be the high a day, obviously, knowing that that 45 hasn't been breached, but also given its proximity to the $0.50, I'm going to be looking for a breach of the $0.50. So anything, a dip trade, in my humble estimation, off the 10 exponential on the 5, and then basically your out is going to be the low, the area trough. Let's call it the area trough. So if you were to weasel in at 21.20 over here, getting along on GME at the 10 exponential on the 5, my estimation, and depending on what kind of risk you want it to take, is to put it below the low over here. I want to see the local area low hold. Otherwise, I want no smoke. Obviously, that requires you to risk about 30 to 40 pennies. Now, ask yourself this: is it worth it from where we're trading? If you don't break the high a day, is the risk to reward worth it? So the maximum you can get if we don't break high a day right now is 15 pennies. Yet, you're going to have to risk 30 some odd pennies into the local low. So it's up to you, and depends on what your bias is. Do you think we take out the top on GME? There's no news on this, bro. Nobody knows why this is moving. I don't know either.
I never know why it's moving. Other than Roy and Kitty, I don't know if the thing should ever be moving anyways in the first place.
Exactly, right? So shout out to the Corleone family. I hope I didn't get it too convoluted there, but essentially we're so close to highs, you have to ask yourself the question, do we break through highs? Obviously you're guessing, right? But that's a look there. Anything you're looking at, Joe, you want to talk about?
We're still here in Nvidia. We're flat on it right now. We're looking at the SPY as we crawl higher, Apple crawling higher. Or I guess Apple's kind of just
coming in.
coming down a little bit here. So yeah, we're just looking at Nvidia holding this position, and we'll see if we get that breakup towards VWAP and we get any strength in the latter half of the session here.
Brendan, I put in the chat 3 times. Sorry, brother, I didn't see it. Just tag me, and if you have a question, sometimes I don't see it because there's no tags, but Hal R has a question. Please ask Joe how far out he typically sells credit spreads, 1 week, 2 weeks, etc. Thank you.
Perfect. So weekly. So I do weeklies. It's forming consistent weekly income. So I personally like to sell Friday expirations.
And the reason is
this to form that consistent basis, weekly
Income,
basis
baby.
income. And
There
it
you go.
also gives the underlying asset less time to close in the money
Fair.
as well. Right? So the less time we have theta working in our favor, the less time that the stock has to work, the more money we get to make, and we like that.
Can I ask a bit of a dumb question?
No.
So
No such.
you know, like when with these yields, you know, the 30-year is supposed to give you the most yield because you're taking on duration risk. The 10-year is supposed to give you more than the 2. The 2 or the 5 is supposed to give more. That hasn't always been the case lately because they've been inverted.
They have
but
been.
the whole point is you take on duration risk, you get rewarded in terms of yield. Is that the same thing with options? The longer down the 3 weeks, 4, 5
Absolutely.
weeks. Does that work that way too?
Absolutely. Yeah, that's exactly how it works.
Okay.
So if you were to sell something a month out, 2 months out, or even 2 weeks out, you're going to collect more premium opposed to just selling it a week out.
Love it. Makes sense. Makes sense. Absolutely makes sense, man. That's why we have you on here, because you've got, you know, unknowledgeable, uneducated me that I need somebody to help me out. And well,
Hey, that's what we're here for. We're here to have fun and always continue to grow and educate ourselves.
I appreciate it,
And
man.
this Nvidia trade is not working out how we liked, but that's okay.
how's it going? Yeah, it's zigging and zagging right now, man.
We're zigging and zagging. It's trading a bit to the downside, coming in a little bit. But we'll hold on to it. We got a couple more pennies before we get stopped out. And then that's it. We'll take a look at something else to see. Because we got Apple selling pretty heavy right
Oh,
now.
yeah.
So if Apple's selling, it's probably going to drag the rest of the market down with us.
I agree with you, man. I've been looking at this 20,000 level on the NQ December contract literally all afternoon. We were watching this one. Number one, it claimed 20,000. And then 20,000 happened to coincide with the volume weighted average price. We've been consolidating there. I was looking for lower lows and lower highs, Joe, but we seem to be pretty evenly consolidated at this point. So I'm really unsure how I want to trade this. I don't want to take anything long or short right now on the future, but there are specific names in the Mag 7 world that could be setting up. Let's talk about them. Amazon, fantastic V-shaped recovery off the low. Knocking on the door of that high a day, didn't quite make it into 191. The high was 190.96. But look at this, we weasel up into $0.75, and now we're coming into that 190 level. It's not just the $10 level that is interesting to me here. It's the fact that the closing print is right here as well. So now we reclaim the closing print from yesterday. Do we use it as support, or is it just going to be another line that we go through? So AMZN basically at this 189 and change. Interesting to me at this level, but yeah, obviously wait for confirmation. The deadest of ones, Apple, right back into the 50 yet again, and finding basically support at the 50 exponential. It did do a bit of a retracement, and we are putting in lower highs. No question about that, Joe. Absolutely accurate that Apple on the way down. But yet again, it gave you a quick scalp trade off that 230 and 2/3, essentially the 50 exponential moving average on the 5, and you were able to take up basically into 90 pennies there. We'll see if it catches another bid at this level, but it has been kind of bleeding a little bit, Joe, since the afternoon, you know?
You know what? I liked it. As soon as, I think the other day they had the week pre-orders on the iPhone.
It was,
16,
yeah.
Right? As soon as I seen the stock drop 3%, I'm like, it's a buy. That's a buy, right? Instantly. So I liked Apple there. We ran some spreads on that. And those worked out really nicely because, again, fundamentally a strong stock. Just because weak pre-orders, to me, that's not really going to hurt it fundamentally. So did the stock really deserve to be down 3%?
Good question,
My
man.
opinion was no. So guess what? I'm buying. Anytime you can buy the dips on these strong stocks on pretty much essentially, I don't know, I would classify it as almost a nothing catalyst, then buy it. That's just my.
I agree, man, and I agree. And the thing is, too, about that, like, you had that Ming Chi Kuo analyst come out. He apparently has connections with Foxconn, some other Apple suppliers. He says demand was weak, or the turnaround time, but the waiting period, was a little bit weak. Then you got the CEO of T-Mobile coming out yesterday. I forget who he was sitting with, David Faber. I'm pretty sure. I don't know if it was Jim Cramer or David Faber. Basically saying that he likes the upgrade cycle, that they're seeing strong demand on their end. And we know what T-Mobile does. They steal. They take everybody from AT&T and Verizon, right? And they've been growing the fastest. So they open up a lot of new accounts. Why do you move to a new carrier? So you can get that phone deal. They steal you from the others. So we'll see if they sell or not. I mean, so many others.
And our boy Danny Ives from Wedbush there loves Apple.
You like his style?
Danny Ives. Yeah, I love Danny Ives.
You like his style?
Yeah,
I
I like Danny Ives. He loves Apple. He's classifying it as a potential upgrade cycle, which we really like.
Yep.
And who knows? I have an iPhone, I don't even know, X. So am I due for a new one soon?
Same, brother. I'm like, I'm like 3 years behind now.
We'll add a couple points onto the EPS for Apple coming next report.
I can't wait, man. You know, it's my biggest position, and hopefully we'll do well on it. Shout out to Corleone family again. The Corleone family talking about GME. And you were not wrong, my friend, because you were accurate on this one. We did take out that 43 highs. Now we're working on the 54 high here, Ram. This one continues to put in higher highs, higher lows. The Katina man was nice enough to get me shorts on this bad boy. And for all those traders out there who do not have their own account, who want to get funded by somebody, what better account? Well, if you're in Canada, that is obviously. What better firm to work for than Real Trading? Shout out to them, because I paid a whole $1.20 for 1,000 shares short. Yeah, which is kind of crazy. Obviously, I didn't use 1,000 shares, but it's nice to know.
Better always to have a little more than you need. Then
there you go. Especially if it's $1.20.
That's it.
Right?
That's it.
So shout out to the Katina man for hooking me up there. But yeah, I see your point, my man. And here we go. I don't want to say we're squeezing on GME, but we're incrementally putting in those higher highs and higher lows. Every time I look at GME, it's got a new higher high. 56 is now, maybe 60 in 5 minutes. The point is, this one is trending, and you don't need to be a chartered market technician to see the higher highs and higher lows coming in on this one, Joe.
What did he tweet on this one?
That's what I look for.
So what's going on? Did we just decide to squeeze, I guess, today?
That's the first thing I did. I told Ram, hold on, let me look at my X account. I went to the dude's account, and there was nothing.
See what he posted.
Right?
So, all right. So maybe we're just squeezing again like last time. So maybe it keeps going higher and higher. But again, pulling up my Nvidia trade, we're still just a little shy of getting stopped out. We'll see if we can catch any form of bid and trade a little bit higher here. Apple does look a little weak, so we're going to see how this turns out shortly.
And guys, if you have any questions for Joe, like I didn't even do this, and this is a mistake, obviously, because we've been like 10 minutes after the lesson. Throw your questions in the chat for my man Joe. Tag me. He doesn't have an account yet, but if you want me to ask him a question, just tag myself at Sharif, and then basically I will ask him. If you can also tag Bears versus Bulls, shout out to the world's greatest moderator there, and then he can tag me as well. Just if you have questions for my man Joe, with respect to the lesson of the day, just please tag me with that. We don't have that much longer, about 9 minutes left or so. So yeah, Joe, get an account MSN. I don't know what that means. All right, whatever. Big Spile Burdette. There's my man, $4.99. I love how you know who he is,
Big
too.
Spile, man. I know Big Spile. He's always getting the shutouts.
He is.
We hear him in the back there. So
right?
Shout out Big Spile Burdette.
This guy's a joker. I've been trying to reach you about your car's extended warranty. Who is this new guy? He's a trader from the floor, Big Spile. His name is Joe, and he's excellent with options. You missed the lesson, my man. You're late to the party because he was dropping some hot lines. So.
Hey, that's all right. There's always another time.
There's always matching, too. I like that.
Yeah,
I didn't even notice.
Yeah, there's always another time. Maybe we'll catch up next time and go on some more.
You got questions coming in here, Joe. We're going to throw these to you right now.
Throw them at me.
So my man, Day Trader Cut, does he trade zero DTE, 0 days to expiry options?
I do not trade 0 DTE. I have tampered in the 0 DTE world, and it is not for me.
Okay, I love it. Decisive response there. Hal R, my man Hal R. Please ask Joe when he sells a put. Is he looking at the delta or support to get into the trade? Thank you.
Both. So later and deeper into the presentation, when we were to dive into the technicals, we correlate the support and resistance levels with our delta strike prices.
Fantastic.
So that's how we do it. So not to get any more complex, yes, we correlate our deltas with support and resistance levels, and this can create more probability in our favor.
Any specific book, Joe, that you would recommend for someone who wants to get their feet wet with options?
Absolutely. By Freeman Publications, there's this book that it's the 3 basic options strategies for beginners. That's what really got me into.
What's the name of it?
Freeman. It's by Freeman Publications.
Okay.
3 basic option strategies for beginners.
Okay.
Or basic option strategies for beginners.
Yeah.
That's
Okay.
the title of it. Yeah. So that's what I read. I also watch a lot of YouTube. They teach you monthly basis, and then I, on my own, kind of taught myself a little bit more. That's the one right there. Going through everything. Monthly, I first started diving into the monthlies, and then I'm like, I don't want to hold on. I don't want this liquidity tied up in my account for a month. So that's when I started trading weeklies. But this book is great. It teaches you so much about options, even from kind of a complex to beginner standpoint, even if you're just starting out. But yeah, look into that book. That's a great book.
Fiddlebeck, sending you love, man. Yeah. Thanks, Joe.
Yeah, no
also,
problem.
I wanted a super that was penny bigger than big spile. We're not petty at all today. Shout out to you, and I'm just joking. Fiddleback, one of the OGs in the chat. Shout out to you. CR8 Love, Crate Love. You have any indicators for help? Do you use any specific indicators that you can use?
I'm strictly, I think I don't know, it's again, totally perspective. As you get more veteran into the world of options, less indicators is better. Sometimes less is more. So I don't want too much information at once. So I strictly use price of where it is priced. Show me what price is telling me.
Okay.
Everything's a lagging indicator of price, so show me what price is telling me,
Love
and then
it.
I make decisions based off of that.
Fantastic. I got another one. Sorry, I keep bringing them your way, Joe. I'm sorry about that.
No, keep sending them my way.
Now, people are getting excited because, you know, there's not too much options chalk on this desk, right?
It's good talk. It's good talk.
All right, Day Trader Cut coming back at you with another question. Does he ever play swing straddles for earnings like Apple or Tesla in the personal account? I know you cannot swing a while on the floor. No, we're not allowed. We got to be flat by the end of the day.
Flat by the end of the day. Straddles, if you're playing straddles on earnings report, by all means, but be aware of the volatility, right? So when you're buying a straddle, the options market is pricing in the volatility. So essentially, you're paying a higher premium than something that outside of earnings. Now, with a straddle, you need the total opposite party to significantly outweigh the other party, right?
Got it.
And if it doesn't do that, now you're stuck with options now with the volatility decreasing day after day of buying something that's not as valuable as when you were to buy the straddle. So no, I don't play straddles in earnings report. I know a lot of people do, but again, I don't play straddles.
We got more. Sorry. Jorge Alvarado.
Send them on.
Joe, do you use max pain and PC ratios for a given strike price on your analysis or on your plays?
No, so from a max pain, I'm not too familiar with that term there, but from a risk management standpoint, and touch on later.
Yeah.
So the premium received, in order for the system to work, is always going to be your max loss.
Into it.
So if you get $100 in premium received, you need to cut that trade at a $100 loss. So essentially, it's a credit. You'll be given $100 into your account.
Right.
Once you hit your stop loss, you have to return that $100 and then an additional $100.
Got it.
All right?
Got it.
So you'll be debited $100.
Okay. Good to know. Good to know. Let's just chat a little market here. There's 4 minutes till the big kahunas come back on. Sorry, I will have to take a little bit of time to weasel my way onto the green screen and gesticulate wildly. Shout out to Adara. But the point is, I just want to talk quickly here about the market because we're locked in a bit of a range here, Ram, with 20,037 to the high side, essentially 20,000 and the volume weighted average price to the low side. And we have been been stuck in this range, Joe, since 12:20. So we're going on almost 2 hours over here. But if I had to guess, I mean, we're touching VWAP many more times than we were prior to that. In fact, we're also putting in, a slew of lower highs right now, looking to break through that 20,000. So 20,000 is an interesting area, right? Like I personally, I don't know how you felt, but I kind of felt that the market didn't have the information it needed to make a directional move till after the election.
Absolutely.
Right? There's just way too much difference between how they want to approach the economies, both candidates, and we don't talk politics, but we're talking economics at the moment, that the market it really isn't certain right now.
There's a lot of uncertainty in the market right now, Sharif. That's absolutely true, especially with an upcoming election. So, yeah, we had the FOMC, so maybe that gave a little more leeway, some more comfortability for equities to trade higher.
Right.
But again, we still have this big event looming.
Yeah.
And that's the election. So again, we don't know.
And the reason I mention that is because like if you're going to take a decisive level, right, and that's the thing. I mean, I don't want to say 20,000 is a decisive level. We were above it, well above it, especially on the NQ December contract, which has different levels than the September. And if you were to look at the highs on the December contract, we almost weaseled into 21. In fact, we did breach 21. That wasn't the case on the September one. Again, different levels. If you want to have a look at the continuous contract, understand how they're calculated, that's beyond the scope of this lesson. But, we're still putting in higher lows. Like that's Black Monday over there. That's the yen carry trade sell-off. And we put in and we put in a bit of a higher low this last little while. September 9th was the low of the month. And we're coming back into that key area of technical resistance, Joe. 20,200 and a half, 20,200. So I've been biased. We whiffle, we waffle until the market has some certainty. And you know what's funny? Is that you often hear about the market wanting gridlock. It doesn't want one party to have too much power because it wants to be able to predict.
Hey, so what do we sell some premium on it?
I love it, man.
Right? Sideways, we like gridlock too. We sell some premium. We do some credit spreads. We're still profitable even if the market's moving sideways.
That's fantastic. I love that attitude, baby. It's like, hey, I'll make money no matter what this market does.
Yeah, there's multiple ways.
All right, guys. One last question for you over here, coming again from Hey Davis. Can you ask him about IV rank, implied volatility rank, and how that affects income and loss? Massive talent available to us in the back in these floor traders. Much respect to these guys and gals. Wow. We're gonna hit the bangs for Joe.
Adara for sitting
Absolutely. And Satya, you guys are absolutely killing it, these guys. You want to?
Yeah, sorry. Repeat the question one more time.
Sure, no problem. He's asking about implied volatility. Can you ask him about the implied volatility rank and how that affects income and loss?
Okay, so from an IB perspective, as you know, with Catalyst and FOMC, implied volatility increases, right? So with the increase in implied volatility, that comes with increased options premiums.
Right.
All right. So when you are selling, so say we were to do a credit spread before the FOMC.
Sure. Oh.
We collect $50. But after FOMC, that same contract can be valued at $100.
Really?
Exactly. So what we want to do is we want to avoid selling premiums when implied volatility is extremely low with the potential to go higher, because essentially you're buying something with less value that can be way more value in shorter term. So we want to avoid implied volatility when it's low and with the potential on the move higher.
All right.
If that makes sense.
It does. All right, guys, it is time's up for us. It is 2 o'clock. I'm going to shout out my man, Joe.
Thank you guys
Throw
for having
up
me.
ones in the chat for my man, Joe. I think he did a fantastic job. Show your love for his knowledge and the lesson that he dropped. Throw those ones. But until now, we're going to throw you over to the big kahunas who are locked and ready to go. Take it over, guys.
Perfect.
Come on, Ram.
See, even Ram knows we just want to let him cook. Let that man cook. Great job. Thank you very much, Joe. Let him Tim cook?
Let him Tim
Yes,
cook.
let him Tim cook.
The market's dropping.
The market's dropping like
We're out.
We
were in Apple there.
Yeah, well, okay, so Apple just lost to 230 and a half. That was fast. Okay, so anyways.
That came in and
Isn't
out.
that so weird?
Super quick right there.
Everything was very, very chill in the market until we came right back on it too. No, I didn't hear anything. Is my thing
This is
even
what we
on?
have to expect now with witching coming through.
Yeah, it is.